Good morning, everybody. Welcome back to another episode of the Market Open, and what a good morning it is. I think this is one of the greenest pre-markets that we have seen in a pretty long time, or at least what it feels like is a pretty long time. A lot of people might be wondering, if you kind of haven't kept up with everything over the past 24 hours, why we are experiencing the type of green we're experiencing. We're going to talk about it and go through everything. It is quite incredible. I am very curious to crowdsource and get a lot of other perspectives from everyone else as well on what they think happened last night, because we got two announcements, and then we'll get into Tesla earnings as well, because obviously that was a big one that most people thought the stock should be down 20-30% based on those numbers, but it's up 7% right now in the pre-markets, and probably not because of what Elon or Tesla reported, but realistically because of what President Trump said yesterday around 5 p.m., 5:30, while the earnings call was going on for Tesla. And you could see Tesla go up, you could see Nvidia go up, you could see Palantir go up, you could see Robinhood go up. Everything went up. And we're going to be talking about what the pivot was, which is how I'm framing this. It seems like it was a pretty aggressive pivot. It was an aggressive pivot with a nuance that I think potentially could be I guess, essentially trajectory changing move for the stock market in 2025. Or it could be something the market doesn't believe in, and ultimately we see this fade in the next couple hours or in the next couple days. But as of now, 40 minutes before the pre-markets open, my goodness, how green we are. Tesla is up 7.73%. Nvidia is up 5.5%. I mean, these are big moves on stocks that are worth trillions of dollars. Hundreds of billions of dollars of market cap are moving. Obviously at 9:30, when the real markets open up, we're going to see how much volume comes in, if this is sustainable, if people sell, if people hold. But the fact that it's been as green as it was since 5:30 p.m. last night, all the way in the overnight markets, in the pre-markets, and obviously now about 40 minutes until we get into the market open, it looks like there's a decent shot, at least in my opinion, that this stuff holds up. Amazon's up 5%, AMD's up 5%, Robinhood 45.20, baby. Hood maybe going back to 50, where it rightfully belongs. Hopefully, we'll see if it can get there. Meta was at 479, back at 529 right now. SoFi up 7%, 12.14. You got Transmedics, that's up 4%. MicroStrategy, 3.5. Apple, back above 200, that's up 3%. Nike's up. Lululemon is up. Netflix is up another 1%, 1,050. Vertiv, they had earnings today. We'll talk about them in a second. They're up 18%, not only because they had great earnings, but now it looks like the AI data center CapEx trade is back on if Trump's pivot continues to be a pivot that the market believes in. And so you've got everything booming. You got everything going green. Bitcoin right here trying to get back to 94,000. We did hit 94.5, got rejected at that level right now back at 93.7, but we're green. We are really green. I mean, the S&P 500, for goodness sakes, is up 2.5% in the pre-markets. It was up 2.6% yesterday. It's up another 2.5%. That's 5% in less than 24 hours. People are grateful if they can get 7 to 8% per year out of the S&P 500, based on the fact that we're down 13% year to date. The volatile move to the upside is kind of happening all in front of us, and we are at least somewhat recovering the amount that we lost. And if you bought in the lows, or if you've been trading it, a 5% move on the S&P in less than 24 hours is a massive move, and that is currently what we are experiencing right now. So let's get into it. There's a lot to talk about. I am very curious to see if you guys believe in this stuff. I've been thinking about it for the past 24 hours. I think there is some reality to the pivot that Trump made last night, but I also think that pivot will not be respected if some of the substance is not followed on through going into the next couple of days, and quite frankly, going into today, because we have Scott Bessent, the Treasury Secretary, that's speaking at 10 a.m. And I think he's going to have to basically underscore everything Trump said yesterday. And as long as he does, I think markets will be okay. But we're going to have to see later today how this plays out. Broccoli Bob, JK, Kevin, June, Defense, Seattle, JB, Nike, Chamu, Todd, Yuzi, for real. What's up? Thank you, everybody, for being here. Good morning. Thank you for everyone who was also on the late night stream last night. Steve wanted to talk about Tesla earnings. I thought it would be like a 30-minute stream and turned into a 2.5-hour stream. So we talked about Tesla, Nvidia, Palantir. We talked about a lot of stuff last night. And that was a fun stream as well. Derek, MH, Doug, Chris, David, what's up? Good morning, Martin, Charles, Alex, Jasmine, Zach. Thank you all for being here today. Let's get started. All right, so let's get into it. There's two things we got to look at first, and then I have a question to pose to all of you guys. And based on that question, I will see kind of what the tone is of what you guys think, and then I'll give my take on this. We got two pivots from Trump last night, two major pivots. The first pivot is that he's not firing J-Powell.
I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. She could have taken place earlier. But no, I have no intention to fire him.
So there you go. That's the first pivot. Trump says, I have no intention to fire him. Remember, a couple days ago, that really got the market scared because you can't have the president of the United States unilaterally firing a head of a federal agency that's supposed to be apolitical, no matter how much you hate him or love him. You kind of just can't have that happen. That's why the dollar sold off, bonds sold off, and stocks sold off. So the first pivot that we got last night was Trump saying he's not going to be firing J-Powell. Now, his argument was the media ran crazy with the headlines. I can't believe that. Why? Because we have a verbatim quote from Trump on Thursday saying, if I want J-Powell to be gone, I will fire him. Trust me, it can happen immediately. So when you say the media went crazy with that, it's like, you told us if you want him gone, you can get him gone immediately. Like, what is the media supposed to do? They're supposed to, okay, we have to take you at your word right here, right? So from that perspective, I think that the pivot on J-Powell was very important for stability in the markets, but it was also something that I don't think the media made some fake news headline out of. He quite literally said he wants to get rid of J-Powell. I think he was talked off a ledge over the past, call it 72 hours by Bessent, to basically say, hey, you can't do that anymore. The second pivot that we got yesterday was, and this was the big one, China. Here's what he had to say about China negotiations and a China potential trade deal.
No, I'm not going to mention COVID. I'm not going to say, oh, I'm going to play hardball with China. I'm going to play hardball with you, President Xi. No. We're going to be very nice. They're going to be very nice. And we'll see what happens. But ultimately, they have to make a deal because otherwise they're not going to be able to deal in the United States. So we want them involved. But they have to, and other countries have to make a deal. And if they don't make a deal, we'll set the deal. Because we're the ones that set the deal. Scott and Howard and myself and others, we're going to be setting the deal. And it'll be a fair deal for everybody. And it'll be, I think it's a process that's going to go pretty quickly. China was taking us for a ride and just not going to have, it's not going to happen. We're going to be very good to China, have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made. So that won't happen, but they're going to do very well. And I think they're going to be happy. And I think we're going to live together very happily and ideally work together. So I think it's going to work out very well.
Now, in that clip, the one thing that they didn't show Trump saying, but he did say this yesterday, is that the 145% tariffs, and this was like really the big thing outside of him being more relaxed and calm around China. He says the 145% tariffs are going to come down substantially. They're not going to go to zero, but they're going to come down substantially. So in my opinion, I think a baseline 20%. I think it's probably going to be 20% on China. I mean, the negotiations haven't started yet, so we'll see what happens when they get into negotiations. But obviously, it's not going to be 145%. However, it's been 145% for the past couple of weeks. And so people have had to deal with the reality. You've seen these viral small businesses or these small businesses go viral because they can't afford their cost of goods anymore based on the tariff. So like these have had real implications on people. But Trump just said yesterday, yeah, we're going to take those tariffs down substantially. So from that perspective, you got two major pivots. You got two major pivots that is causing the type of green that we're seeing right now in the pre-markets. Number one, he brought more stability back to the markets by saying he has no intention to fire J-Powell. He can say that he wants J-Powell to cut rates. Yeah, you can say anything you want, but when you introduce the idea of removing someone, that's what got the markets off their tilt last week. He confirmed that he's not going to do that. And number two, and most importantly, he confirmed that the China negotiations will begin. And there are some reports saying that he's going to meet Xi Jinping in May. Those aren't really confirmed yet, but it seems likely that they're going to start negotiations soon. And that the 145% tariffs obviously have to come down because there's no way you can even begin a negotiation if you're not willing to cooperate on the extreme level of the 145% tariffs. So here's my first question to everyone on the day. Simple yes or no. Simple yes or no. It's in the chat right now. Did Trump cave on China? That is my question. Did Trump cave on China? I'm going to give both perspectives because I've been thinking about this for the past 24 hours. I'm going to 74% of you say yes. Okay. So that was my first reaction as well. I was like, dude, he absolutely caved, bro. This was, I mean, this was one of the most egregious forms of caving because I don't know what we got out of it, but then I thought about it a little bit. And I'm like, maybe we got more than what I'm thinking. So here's both sides, right? The first side of him caving is you go through all this pain, you go through all this volatility in the stock market, you take away so many trillions of dollars, including on Tuesday or Monday, we lost $1.5 trillion in the stock market. Like you go through all of that pain, primarily because of 145% tariffs on China, super hardball, aggressive, yada, yada. And then you say, we're going to take it away. And so my initial reaction last night was, wait a second, why did we go through all of that? And what exactly did we get? Because the only reason you go that extreme to 145% is because you want the other side to be like, all right, Mr. Trump, we're going to kiss the ring. 145% is way too much. It's too aggressive. We can't deal with it anymore. We're going to start like getting ready to negotiate. We're going to, make the first call, yada, yada, yada. China didn't do that. China did not do that. China said, "Hey, we're gonna go to the death. Like we're gonna isolate all of your allies. We're just gonna keep finding ways to get you to squirm because we do not want to give up leverage. And 145% is not going to scare us. In fact, China hit us back with 125%. S&P 500 right here up 2.6% in the pre-markets. So the first argument, which is the initial reaction that I think a lot of people are having, is what was the point of going through all this if we were just going to get rid of the 145% tariffs? Because again, let me say, negotiations have not started from everything we know. So if negotiations haven't started, he's just getting rid of what seemingly was his biggest leverage, right? Which is the fact that he can tariff the crap out of China, and we consume so much out of China that that's not a good thing for China, because at the end of the day, we are the biggest consumer and they need to be able to sell us products. The second perspective on him not caving, but rather him creating him creating a foundation to be able to negotiate kind of goes in the following logic, if you think there's any logic to this. And I thought of this over the past 24 hours, so it might not be the best argument. But the argument here is that, hey, Trump needed to play such hardball. He needed to create so much pressure and tension and fear towards all of our allies, not necessarily China, but rather our allies, aka the South Koreas, the Japans, the Vietnams, the Malaysias, Thailands of the world, etc. We needed to show them we were so freaking crazy by putting on 145% tariffs against our biggest trade partner that they would get so scared that we would be that aggressive with them that got them to the table to get more friendly with us and give us more concessions. Like, that's the best way I could justify that we went so crazy against our biggest trading partner that all the other countries that do trade with us at a fraction, like honestly, like 10% of the trade that, or even 20, or like 1/100th of the percent of trade that we do with China, that they were like, oh, if the United States is willing to do that on those guys, then we better get our act together, because there's no way we can keep 30% tariffs on random stuff coming into the United States, because the United States at this point, Trump doesn't care anymore. He's ready to do 145% against their biggest trading partner. So we need to get our stuff together. I think that's one argument. That's one argument. I'm not saying that's the best argument, but other than that, I can't really figure out what we got from engaging in this aggressive battle and then walking all of it back before the negotiation started. Now, you might be asking, well, wait a second, why do we walk it back? It's likely because, and this is one theory that's out there, Bessent talked to Trump and he said, dude, you don't have the cards. You don't have the cards. Now, Trump told Zelensky, you don't have the cards. I think Bessent could have gone up to Trump and said, you don't have the cards. Now, why do I say Bessent might have said this? And we'll hear more from Bessent later today. But this was one of the headlines we got after the market opened yesterday, which is so ironic because Bessent says he loves Main Street and that it's time to stop, focusing on Wall Street, focus on Main Street. And then he does a closed door investor summit hosted by JP Morgan in Washington, D.C., very Main Street of Mr. Bessent. But he said to those investors in the closed door summit, the current tariff standoff with China is unsustainable, and signaled that he expects a de-escalation. And while formal negotiations have yet to begin, Bessent told attendees that a deal remains within reach, according to sources that were present at the event. Now, I don't know if this was supposed to leak or not, but by Politico reported it like pretty quickly after the meeting concluded. So I don't know if he wanted it to leak, if he thought it wasn't going to leak, or if this was all part of the plan. But what Trump said about China, aka walking back all the rhetoric and taking out the 145% tariffs. I mean, he literally said, I'm not going to play hardball with China, right? Just like the tone and vigor that he speaks about China in that press conference yesterday was fundamentally different. It was like a full 180 from what he's been talking about even on Monday or from last week. It is very consistent and congruent with everything Bessent said. Bessent said, hey, we've got to de-escalate, and this is unsustainable, which obviously you got to de-escalate. You got to get a deal with our biggest trading partner, like for the state of the economy. And B, you got to de-escalate. 145% tariffs, 125% tariffs against each other doesn't make any sense. So either Trump was going to say whatever he said yesterday, regardless of what Bessent said in that JP Morgan investor summit, or the fact that it got leaked and the market, by the way, started going green around 12 p.m. when that leaked. I mean, we were kind of green yesterday in the pre-markets. Remember yesterday for the first 2 hours of the show, I kept saying, what's the headline? Like, why are we so green? What's going on? Like no one knew why we were green. There was no major headline. The manufacturing index came in 50% worse than expected. Like you had the ECB president saying tariffs are not the best thing. Like we didn't get any real headlines. Apparently, I think it was because Bessent was in a freaking investor conference with JP Morgan during that time. And he was telling them that the China stuff is going to be cooled down. And whether that was supposed to leak or not supposed to leak, at 5:30 p.m. last night, Trump echoes the same statements and walks back all of the rhetoric in the context of China. Tesla right here, we're about to talk about them in a second. They're up 8.2%. So whether you believe he caved or not, whether you believe this was architected or planned, or whether you believe at 5:29, Bessent told Trump to walk down the China tariffs, and then Trump ended up doing it in front of everybody, which really created momentum last night. I mean, after hours was the most green I've seen in like what feels like over a year. Regardless of if you believe he caved or not, 72% of you believe that he did cave. It looks like we're in a different paradigm for the tariff discussions, which is why, I mean, what we've been saying on this show, I say we, like I have some team or something. what I've been saying on this show for the past couple of weeks, and I guess we include Steve and all the other guests that come on the show, even Kris, who's obviously been super, bearish about what Trump's been saying and not really happy with how this has been going down. The sort of core message has been, this can change instantaneously because this is not a pandemic. This is a man-made inflicted disaster. And if one man started it, one man can end it. I mean, all we needed was a tweet. And instead of getting a tweet yesterday, we got Trump explicitly saying the tariffs are going down substantially. He literally used the word substantially from 145%, and that he's not going to fire Powell. We got the pivot. And so I don't know, dude, if you're short in this market, I think there was a reason you could justify being short. The reason I have not gone short or sold in this market is just because it's scary. Because if it's not a global pandemic, and I know there's a lot of uncertainties, and usually uncertainties are heightened by things that you can't control, this is something that absolutely was in control in the context of Trump had the power. He had the ability to control what would happen. And yesterday he talked for 5 minutes, and in those 5 minutes, we've added $2.5 trillion back to the stock market. So I think if you bought the dip, congrats. If you are leveraged, it looks like the margin calls are at least not going to be there today, given how green we are. But the question is, and this goes into the next part of this macro discussion, and then we'll get into Tesla. Does this last? Is this sustainable? Which is the next question I will ask you guys in the chat. Can we keep this green? My simple take on this is, look, we can keep the green if we build on this momentum. If we have more trade deals, if Trump comes out and says good things, if Vietnam, I think, was reporting this morning that they're ready to talk with the United States, yada, yada. If we get all of this good news piling on top of each other and the rhetoric doesn't escalate, which it seems like it's fundamentally de-escalated based on what Trump said, then yes, I think this can sustain itself. And I think we are entering a new paradigm in 2025. Earnings, if they continue to do well, we should be able to have that bull market that we've been thinking about, given inflation should come down. By the way, the Fed should be able to cut rates now, because if tariffs are going down substantially, they shouldn't be that afraid of tariff inflation, yada, yada. So you got tariff inflation coming down, overall inflation coming down, earnings growth going good. We had some earnings this morning. AT&T smashed earnings. We have a couple companies after the bell. Tesla didn't really smash earnings, but still you have a lot of companies doing well. Intuitive Surgical, decent earnings yesterday. And then you've got the overarching pivot by the Trump administration in terms of being more friendly on tariffs. You put all those things together, I think we could have a pretty good bull market. I think absolutely it could happen. But if this was a one-time kind of like friendly All right. We got some good news from Trump. We got some good fluff from Trump, which markets have pumped constantly over the past couple of weeks on fluff. Bessent says we have trade deals. The White House says we're talking to partners, yada, yada. All these little headlines have pumped the markets literally 2 or 3% in a day, in a freaking hour. Today might be the same, where we got the pump. Everything looks amazing right now in the pre-markets. Meta's up 5%, SoFi's up 7%, Tesla's up 7%. But then the market wakes up and says, wait a second, things are still pretty bad in the context of we don't have any trade deals. We still have universal 10% tariffs across the board, which, by the way, my next prediction is that Trump's going to bring that down. I don't think we're going to keep 10% tariffs across every country, but I do think that will eventually have to come down. But the market might wake up and say, hey, these things are still not resolved. And because they're not resolved, it's hard to still take a chance on equities trading at the multiples that they are. Obviously, I think some stocks are incredibly cheap, like an Nvidia, but other stocks are, you could say, expensive if the tariff volatility is still aggressive. So I think those are the two worlds. Either the market believes this is possible to sustain or not. And we're going to have to see how this ends up playing out. 62% of you say yes. 62% of you say yes, it is a chance, or we have a chance that we can hold on to this green. My vote would be yes as well. I think this is such a major pivot that there's a really good shot we can like sustain the level of momentum we have, but it's going to need to be followed up with some good deals. And I think the market might give Trump another week or two, but they need to announce not even like an actual deal. They just need to announce the finalization of like, hey, we have a deal. We didn't sign it yet, but everything's agreed to. And I think the easiest partners to do that with are India, based on the headlines we had yesterday, and probably Vietnam. Japan's going to be a little bit harder, but I think Japan would be third after that. And obviously that could help this market. Brandon, thank you for the $5 super chat. Yes, because inflation is down, unemployment is good, earnings are good, and corporate tax rates are coming down. That is bullish. I agree. And earnings being really strong by the Max 7 could catapult all of those things to ultimately be what the market cares about, because the market at the end of the day trades on earnings. But we need those earnings to continue to maintain their momentum. The 10-year is coming down as well. That's another really bullish thing. So the 10-year right here, we haven't seen 4.2 in a while on the 10-year. It's at 4.29, so it's still very close to 4.3, but it was at 4.45 last week on Wednesday. The 30-year was very close to 5%. Right here on the 30-year, you got 4.735. So we got people buying bonds, which are getting yields to come down. And then you got the Dixie, which was at almost 97 2 days ago. It's back at 99.13. And what we really needed to see come down, because this thing was going up in such a fashion that would make you think the world is ending, is gold. Gold was at 3,500 yesterday. It's back down to 3,300. People are selling out of gold. They're getting back into assets that, they can take a little bit more risk on. They don't have to fly to safety to gold, because it might not be that much safety, because you don't need to be as safe in an environment where tariffs are not going to be as volatile as they were a couple weeks ago. TLT as well is up in the pre-markets. I do have a TLT position. So that right here, if yields continue to come down, that should do well. TLT right here, $88. I haven't seen it up 2.5% in the pre-markets in a while. So if we continue to get yields coming down, rate cuts coming down, then I think TLT has a good shot to get closer to that $100 range. We got a green pre-market. The market likes it. Palantir is $1.04 away from 100. I mean, maybe we get to see triple digits again on Palantir for the first time in a couple months. Nvidia, 104 in the pre-markets. I mean, the path to 120 seems to be clear to get back to kind of that range it was already trading at. Question is just if it has the momentum to get there. Tesla, which again, we'll talk about in a second, 256. I mean, just the worst earnings you could imagine. This thing is up 8% in the pre-markets. It's incredible. Broadcom's up 5%. Robin Hoodie looks like it wants to get back to 50. It's at 45.22. Even if we can hold 45, I would be very happy. That's up 7.4%. Grabby Grab, 5.5%. They got earnings next week. That's going to be important. SoFi back to $12. I mean, these are levels that we've been waiting for a long time across the board. The NASDAQ is up 3% in the pre-markets. Like this is what we've been waiting for. It's just the question of, can we sustain it, or are people going to sell into this? Are people going to get the hell out? Are people going to use this as exit liquidity? I think in the coming hours and definitely in the coming weeks, we're going to figure out what ends up happening and if this market can maintain the momentum that we're seeing right now. So regardless, if you think Trump folded or not, it is what it is. Markets are green. And as long as we can continue to keep up this green, hopefully we get back to a more bullish market. PMI data is at 945. Okay, cool. What am I expecting? Well, I'm expecting a contraction in PMI, especially based on the manufacturing index that we got yesterday. Is it services or manufacturing? It is services and manufacturing. Okay, so Yeah, we get new home sales as well. We get services, we get manufacturing, we get global composite, and then we get a bunch of oil data. Bessent's also speaking at 10 a.m., so that's going to definitely have a big impact in the market. If he underscores everything that Trump was saying about China, that'll be really good, and that'll help everyone. VIX as well is down 9%. It's at 27. So you got the volatility index coming down. If you were short the VIX over the past couple of days, you've done well. You weren't doing well on Monday as it was up 15%, but based on these announcements after hours, we've started to see the volatility index really die down, which is good. I mean, you need less volatility for markets to overall do well. S&P 500 right here, up about 2.3% in the pre-markets. All right, cool. So having said that, let's talk about Tessie. Let's talk about Tessie. Let's talk about Tessie. Dude, it's so green, right? I woke up and I was just like, this is green. Like, I didn't expect it to be this green. Like, last night was green, after hours was green, and then this was green. Yes, I'll be streaming Bessent. We'll stream Bessent for sure. And we'll see what he says at 10 a.m. Dude, everyone's portfolios must be up a lot. Like, if you've been buying any level of this dip over the past couple weeks, like, this could be one of those days. And if it holds, if it's not just like all right, we're up in the pre-market and then it kind of falls we give back half of the gains or 40% of the gains or whatever. This is one of those days that could be one of the best days in 2025. And obviously 2025 has been rough. A lot of people have lost a lot of money. I'm in that same position, but it could be a day for some pretty decent recoveries if we can just hold on to this momentum. Okay, Tessie. So let's do this poll right here. I guess here's the question. Did you expect Tesla to be up 7% today? And it's okay to say no, because based on those numbers, I cannot fathom what we got from Tesla yesterday in terms of the numbers and the qualitative parts of the thesis, along with the macro pivot that we got yesterday from Trump, is why it's up 7.5%. But my goodness, were these numbers disgusting? I mean, like my visceral reaction was, I cannot believe it was this bad, but it was that bad. And the market doesn't care. And I think the market doesn't care for a couple of reasons, but let's look at the numbers right here. Tesla was expected to do 27 cents of EPS. They did, 42 cents. They did 27. They missed by 36% on EPS. It's a 36% miss on EPS for a company that trades at 115 times earnings and that's worth $700 billion. Any other stock, if that was Nvidia, if that was Google, I mean, like, you're talking about down 10% instantaneously. Tesla was up yesterday after hours, up about 1%. Then Trump did the pivot, and then we went up 5%. And then on revenues, the market wanted $21.3 billion. Tesla said we're bringing in 19.3. So they missed by about $2 billion on revenues. They also confirmed that tariffs have created an uncertain environment. They kept using the word uncertain in the shareholder deck for their energy and automotive businesses. And more importantly, they said the energy business, which obviously has to do with the batteries, which is likely why the tariffs are creating more volatility, are going to be worsely affected than the automotive business, which was a surprise to me because I thought autos would get hit worse, but they're saying that actually energy is going to get affected even more by the tariffs. So why did Tesla pump then? Why did the Tesla pump? There's a two-part answer. Number one is because Trump pivoted, and we talked about that for the past 20 minutes. So that was bullish, and that's what the market wanted. But there was another reason, and this was really funny to see play out in real time because Elon kind of said this without officially saying this, and then he waited a couple minutes before he officially said it. And you'll get what I mean as I play this clip right here. But he addressed everything going on with Doge, and because he addressed it in a way that the markets actually liked, we ended up getting the pivot. And of course, I don't have the clip because for some reason I lost the clip. Let me see if I can find it right here. Where is that clip? Okay, I'm going to have to get the clip in a second. I had it saved, but I guess I don't have it saved. So what did he say? Well, he said something pretty simple. He said, I'm leaving Doge. He said, well, he didn't say I'm leaving Doge. He said, starting next month, my time in Doge will decrease significantly. That's all the market needed. Now, the reason it was funny is because he kind of set up the question to be like, a lot of people have been talking about Doge and if it's important to deal with the government, yada, yada. And I believe it is more important to care about government waste and fraud than to focus just on my businesses, because if the government continues to have waste and fraud, there won't be any business. And you could see Tesla go from 250 to 242 as soon as he said that, because everyone was like, oh crap, he's picking Doge over Tesla. And then he says, having said that, a lot of my work is done in Doge. Therefore, I will not be leaving Doge, but my work in May, or starting in May, so basically in a couple weeks, will significantly be decreasing in terms of the amount of time I'm spending at Doge on the day-to-day operations. He said he might spend about 2 days a week there, but in reality, right now he's spending about 5 days a week, and he basically said, I don't need to be spending that much time at Doge anymore. And that's it. That's what the market wanted. And this was pretty predictable. But we even talked about it in the market open yesterday, which is that I think there was a Fox report that said, hey, if Elon, their sources are saying to Fox that Elon's going to get ready to announce that he's going to be leaving Doge. And I think Steve was on the show on the market open at the time, and he said, if Elon says that, stock's going to be up big. Stock's up big because of that. I mean, you got the Trump pivot, which is helping. So that was the macro backdrop that created the foundation for this. But also you got Elon saying, hey, I'm going to take some time, step away from Doge. Whether you believe that Doge is effective or not, or you think it matters, at the end of the day, Elon has confirmed, if you believe him here, that he is getting ready to leave Doge, or at least not be spending as much time in it. And as a result, the market got very excited. Here's Dan Ives this morning on Bloomberg on why this was such an important thing for Elon to say.
50 writing, Musk recommitting as CEO and leaving his Doge role is the biggest and best possible news investors could have heard. Tesla got back its biggest asset, Musk. Dan Ives joins us now for more. Dan, good morning. Good to see you.
Great to be here.
Okay, so you're saying this is a recommitment. Other people would look at this and say, well, he's still going to be there 2 days a week, and that's a problem.
I mean, I view this was an off-ramp. I mean, however you want to sort of label it, 1 to 2 days, I think this is the beginning of the end for him at Doge, with Trump White House, because that was a different Musk on the conference call. That was a different Musk than we've seen actually over the years. He addressed it head on, read the room, and we've talked about it. It was a fork in the road, a moment of truth.
Sure.
He took advantage of it, and I believe now it's a new chapter, and he leaves a dark chapter in the past.
Let's unpack the perceived problem of the last few months that you called a dark chapter. Some people believe, many in fact, that the president and Elon Musk relationship has damaged the brand. In the mind of liberals, want to be very clear about that point, and that's hurt the stock. Do you acknowledge that is what's happened over the past few months?
We've talked about it. I mean, it's the brand damage is real. It's been a dark cloud on Tesla's that we talk about anywhere from 10 to 20% because Tesla became a political symbol.
Why would that change if Elon Musk is still there 2 days a week?
Again, and I don't believe
that's a good question, by the way. I mean, I like the market's pumping off the headline that he's like not being as involved in Doge anymore, but his affiliation with Trump, which you could argue has been the reason for all the isolation and brand damage, is not really going away unless he just stops talking to Trump or stops publicly supporting him. But if that's not changing, which I don't think that's changing, then that level of quote unquote brand damage probably is still going to exist.
Again, the 1 2 days a week, however you want to phrase it, my view is, and we've talked about on the show, this is the off ramp to be like, okay, 1 2 days a week and I'm gone. I'm not saying that you're not going to see him at times with Trump, but we believe this is his taking a massive step back, recommitting to Tesla. And look, this was a different Musk on the conference call. This was not the normal Musk. This was one reading the room, aware of everything going on from a brand perspective. And I believe it's going to start a new chapter. Well, the brand damage is still going to be there. But I believe at least it will be contained. He doesn't double down. And this was an important time that I think would define the future of Tesla if Musk actually doubled down and do it.
But how does he fix the brand damage now? To Jonathan's point, 1 to 2 weeks in the White House, he's also still the self-proclaimed first buddy. He's still going to be out there advocating for the president.
I think that's going to be significantly diminished. I mean, I'd be surprised if we sit here 1, 2, 3 months and that's still happening. Even on social media, I mean, he's still going to, say what he wants, but I think even some of that will be diminished. Look, I don't know if it's the board, if it's some of his confidants, but the reality is for Tesla, look, that's why this was a code red.
Is this a moment, though, for Tesla to realize that they actually need to brand themselves as Tesla, not as synonymous with Elon Musk?
I think that ship sailed, because I think the reality is Musk is Tesla, Tesla is Musk. And so much of that has been a positive, despite maybe some criticism. The last 3 months, the reason it's been a dark chapter, not just because of the quarter deliveries, but the brand damage and what ultimately Tesla became a political symbol. And I think it's a recognition that needs to end.
So I don't know if that brand damage or brand affiliation with Trump is going away anytime soon. But if the market, for whatever reason, the market wanted him to say he's leaving Doge, or at least spending less time at Doge and going back to Tesla, which I realistically don't think, if he's in California headquarters every day versus even if he's in Washington, D.C. every day, that Tesla's going to sell more cars. I mean, I don't think anyone realistically believes that if Elon spends 3 more days a week in the headquarters of Tesla, they will sell more cars. But the perception of it has been so damaging to people thinking that he just doesn't care. I mean, the average Tesla shareholder, like my dad, for example, is just like, why is this guy not at his job? Right. And so like my dad doesn't understand why he's at Doge or anything like that. And you've got people like that think like my dad that don't like study Tesla every single day. They just see the headline that Elon's not at Tesla and they're like, do I even want to hold my Tesla stock? So from that perspective, I think that's where Dan's getting to, that those types of people are going to feel more friendly to Tesla, just knowing the fact that Elon's not necessarily spending all of his time away, potentially not doing things that would be affecting Tesla. This is the clip right here of Elon admitting yesterday. This is what really got the stock to pump as soon as he said this around leaving Doge and focusing more on Tesla.
But the large slug of work necessary to get the Doge team in place and working in the government to get the financial house in order is mostly done. And I think starting probably in next month, May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back, which we'll do if it has the chance.
That's it. That's all you needed. Even if there was, I don't know if there was something wrong technically with their stream, but multiple times throughout the stream, it seems like there was like a 5-second pause in between sentences. So either Elon was really thinking carefully before he said every word, or there were some technical issues. But regardless of it, that's what the street wanted to hear. That is why Tesla stock is up 7.6%. The number one story on the earnings yesterday is that he is starting to leave Doge. Now, let's talk about some other ancillary things that happened. First, autonomy. Elon continued his commitment and said that autonomy was going to be a major part of the business. He says, I believe within the next few quarters, the autonomy part of the story is going to become more prevalent. By second half 2026 is when you should see it begin to affect the bottom line of the business. That's a big commitment. He's saying by next year, second half, the net income, the earnings per share, should see an increased improvement because of autonomy. FSD, robotaxi, whatever that may mean. He says, I encourage people to look past the bumps in the road. He then went on to say that you should expect exponential growth if it works. He added the if it works. So he's putting the caveat there that, hey, we don't know if it's going to work, but if it does work, you should expect exponential growth in the autonomy part of the business, which should then increase earnings per share dramatically. That's why people are paying 120 times for Tesla's earnings, even though they're growing negative 20% year over year in their auto business and negative 9% year over year overall. It's because they believe that exponential growth, most companies in the market don't have the potential to achieve that. And as a result, you pay the premium for Tesla. Now on tariffs, what did Elon say? This was the first public disagreement with Trump. We got 5 minutes until the market opens. Elon says, I don't think tariffs are the best for prosperity, and I'm in favor of lower tariffs, but ultimately it is up to President Trump. He said this in a variety of different ways over the past couple of weeks, but it obviously wasn't as explicit as he said it here. He did say, I'm in favor of whatever President Trump wants, but he kind of clearly said, hey, tariffs are not good for the business. The shareholder deck said multiple times tariffs are creating an uncertain environment that will be very volatile. And it's the first time he publicly acknowledged this is just not the best thing at the end of the day for Tesla's business. So he mentioned autonomy will increase the net income expectations for Tesla. He mentioned he's leaving Doge, and he mentioned that tariffs ultimately aren't the best thing for Tesla as a business. The final thing he said is on Optimus. I expected him to pump it a lot more, but I guess he was looking at the stock and it was already pumping because of Trump, so he didn't need to. But he says we can get to 1 million bots by 2030, maybe 2029, in terms of overall Optimus robots sold. Look, maybe that happens. Maybe that doesn't. Maybe that's super conservative. Maybe that's way too optimistic. He did say we would get 500,000 by 2027. I don't know if that's going to happen necessarily. Again, they've got to really get the supply chain and manufacturing up to speed to be able to even get to that type of a commitment. But I don't think the stock is pumping on the Optimus headline or even the FSD headline. I think, quite frankly, the stock is pumping because Trump pivoted. The tariffs might be going away, which were cited many times in the shareholder deck as a headwind to Tesla's business. At least the China tariffs are going down substantially. Auto tariffs might come down. Universal tariffs at 10% might come down over the next coming weeks. And you've got Elon saying, I'm leaving Doge. So you put those two things together, and you got Tesla up 7%. It is really fascinating. I mean, it is really fascinating. Now, one thing that's not fascinating, and we talked about this yesterday on the show as well, everyone was expecting Tesla to tank. Like, everyone was waiting for Tesla below 200. And I think when everyone's expecting something, it tends to go the opposite direction, especially when it's a name like Tesla, because so much of it is already priced in, right? Because it's Tesla. So many participants trade this stock. So for something new to catch Tesla off guard, it's possible. But going into an earnings when everyone knows the numbers are going to be shitty. Now, they were shittier than I expected, but it wasn't that egregious, though it was that egregious, but it still wasn't that egregious to get Tesla to tank, especially with the macro pivoting the way that Trump pivoted. Bitcoin right there, 94,000, back to 94. We got 3 minutes until the market opens. There you go. You got Bitcoin back to $94,000 here right now. Whatever happened to the Tesla Semi? They did say in the deck that they're still working on the Tesla Semi, but yeah, we don't have any further updates on the Semi, the Roadster, any of that stuff. So FSD and robotics is a story, and eventually those stories will play out over time as people get excited for it. Now, look, given the earnings, that I think the people buying Tesla right now in this pre-market or that buy today, they're buying it purely on hype. Let me just say that right now. There is nothing in that earnings where you say, I need to buy Tesla stock. There's just not. Like, I think any objective Tesla bull, and I listened to a couple of them last night, and they were pretty, like Farzad, all these guys, they were excited about the earnings, but even they acknowledged, like, dude, these numbers were just... Also, here's one thing I forgot to mention, and this actually pissed off the biggest Tesla bulls I know. That whole new affordable vehicle that they've been promising for so long, that's happening in terms of production for H1 2025. So they remain committed to being able to show the production beginnings of a affordable vehicle by June, which is H1 2025. So it has to begin in the next month. So I would expect an update pretty soon. But, and this really, I mean, like, I was surprised by some of the people that were pissed off last night because of this. It's not really a new car. It's going to be a stripped down Model 3, Model Y. They kept saying on the call, hey, we're more focused on affordability. We're not really focused on like some brand new vehicle that's going to be like some game-changing product. And a lot of the Tesla bulls that I was looking into last night, just looking at their tweets, they were like, hey, they kind of lied to us. They kind of lied. There's not some affordable brand new model. It's just going to be like a Model Y that has 30% less features. That's maybe $12,000 less than the base cost. More affordable, which is good, which is what Elon kept saying on the call yesterday, is that the car needs to be affordable, but it is not going to be some random, brand new model that they're going to create an entire lineup out of. So that's one thing that got a little, that got Tesla shareholders pissed off, which is why I'm saying right now, if you're buying it, it's a lot of hype because the earnings weren't amazing, but the macro was good. Elon's leaving Doge, and that's why the stock is up 7% right now. Wednesday, April 23rd, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, let's get into it. Here we go. It's a green day. Let's see what we got. Wake your ass up. Tesla opens 253.43. That's up 6.5%. The S&P 500, 540 on the day. We were here about 2 weeks ago, back on April 8th, and then we fell down about 7%. Now we are back 540. That's up 2.46%. Palantir, 98.25, got rejected at 99 in the pre-markets. Let's see if it can hold this momentum. I do see some red candles across the board, but the majority of what I'm seeing is green. NVIDIA, 104.42. That is up 5.59%. NVIDIA is green. So we've got some momentum on this stock that hit 95 the other day. Broadcom is up 5.3%. Bitcoin, 94,100. Amazon, 184. That's up 6.3%. Robinhood, 45.52. I am I would say, over leveraged on Robinhood. I have a lot of leaps for this thing by 2027. My plan was after earnings, let me de-risk. Let me take some of those off the table. Now we're going to see, are we actually in a bullish market? Are we kind of going back to what we thought 2025 would be? So after earnings, we'll kind of recess what happens there. But Robinhood 45.40, that's up 7.8% of the day. It was up another 4% yesterday. Grab up 6.72% back to 450. Grab fell to 340 on April 8th. So if anyone took advantage of that dip, not a bad turnaround. 453 now on Grab. SoFi, that's up 6.3%. Meta, 531, 6.34%. Intuitive Surgical, decent earnings yesterday. The stock was initially down 8% after hours. The Trump pivot kind of got the market overall more excited, even if initial reactions on some of these earnings were bad. That one is up 7%. MicroStrategy is up 3%. Verizon is down, looking like the safety trade kind of going back into growth. Apple right here, 206, that's up 3.45%. Hims is up 10%. Costco's up 1%. Nike is up 2.8%. Lululemon's up 4%. Netflix goes red. Interesting. That was really green yesterday. So maybe that one's just getting some people to sell into some strength or maybe take some profits from yesterday. But that one slightly green on the day. It was more green yesterday. Wow. Rocket Lab, 8.3% on the day. Look at Tessie still holding on to 250, down from 257, but still up 5% of the day. Robinhood is at 45.29. Palantir 98.92. Where is Reddit? Reddit is up 8.4%, 110.27. 110.27. Are we risk on? It feels like it's going risk on. I mean, again, I think it's going to take at least another week or two to see if this can hold. Definitely, a couple days. Can we get through at least today with holding this momentum? But it is looking encouraging. And as long as Bessent and Trump double down on softening up on tariffs, then I think we can continue. Rocket Lab right here up 8.3%. Riot. All the Bitcoin miners have had a really good 2 days. They've had a really crappy year, but they've had a really good 2 days. Ride right here is up about 2.4% or 6%. Marathon is up 2.4%. CoreWeave, that's up 11%. That IPO continuing to go well. Google 156, that's up 3%. Google getting some love. It was at 146 2 days ago. Now it's at 156. Nubank right here, 1153. That's up 3%. The Qs are up 3.2% on the day. TLT is up almost 3% on the day as yields come down. Wow, the S&P is not stopping. 541. 541. Not stopping. All right, here's the question. Who's selling? Is anyone selling into the strength? Is anyone selling? Anyone taking advantage? Anyone closing out some puts? Is anyone buying? Or are you buying right here? Look at Palantir. Oh, do we see triple digits again? Let me see resistance at 100. Do we see triple digits again? At 100, the resistance for Palantir is 139,000 shares. It's a decent wall. It's not impossible for Palantir to overcome that, but that is a decent chunk of shares that need to get bought up to get there. Okay, everyone's holding. Dude, everyone's holding. If we tank 7% or 10% or 5% or whatever from here, everyone's gonna be like, damn it, I should have sold this day. But like that's been the story or this whole year, right? The story this whole year for the bulls has been you buy, everything goes down, you buy the dip, it goes back up. You think, hey, maybe I should sell, maybe I should de-risk. And then you're like, well, I'm a bull. And then you stay bullish, and then Trump says something stupid. It goes back down, and then you have to buy the dip again. And that's just been the lifestyle of a bull investor in 2025. Whether that's good or not, I mean, we'll see. But if we end up getting a overarching bull market, then I think that's going to be probably the strategy that outperforms everything else this year. Rocket Lab right here, still up 8%. Gold is down 2%. That's nice to see. So it's a little bit of money coming out of the gold trade, which is really good. GE right here is up 2.83%. Lockheed Martin was up 0.84%. And then Vistra is up 6.94%. Now, VRT, they had earnings today as well. Vertiv, they're up 14% on the day. They crushed earnings. It wasn't like one of those NVIDIA types of earnings, but they had a good enough earnings, and the data center play is starting to get back in style, given that NVIDIA was obviously something that people really cared about getting more momentum. And now that it seems like Trump's pivoting off tariffs, that could be good for NVIDIA. Is Palantir at 100? Palantir, no, still at 99. We are not at 100 yet. VRT, in terms of their earnings, so they beat by 3%, 64 cents versus 62 cents on EPS, and then 2.03 billion versus 1.94. They beat by 5%. Again, relatively modest beats on the top and the bottom line, 3 and 5%, but you got Vertiv up 15% because people are happy that the AI CapEx trade might start to get a lot more of a benefit as tariffs come down. Tesla got some red candles, 257 to 247. I think that was expected. I think most people thought, all right, Tesla's going to give back a little bit of it. Broader market's not really giving back as much as Tesla has given back yet. So you got some people definitely using this as an opportunity to sell. which is fair. I think that's normal. But we got to see if it actually goes red on the day. Again, those earnings were bad. So if it does go red, I mean, I don't think anyone would be surprised. Does it go below 200? I don't think so, but could it lose 3%? Sure. Now, what would be really interesting is if Tesla loses their gains today and the market stays green. That would be the market saying, yeah, we're not going to take it below 200, but those earnings were not good enough to justify any gains. I kind of don't think that's going to happen. I think Tesla's moving up and down with the macros, so we'll see if it can hold on to these levels. S&P got a little bit of a red candle right there, 541 to 539, still up about 2.4% on the day, even though we are red. Boeing had earnings as well. They only lost 49 cents a share versus 130 a share. So they beat by 62% on EPS, and then revenue they missed by about 1%, 19.4 versus 19.7 billion. Boeing stock is up 7%. And Boeing doesn't tend to go up 7% in a day. So this one's been hurt all year. Boeing's starting to get some momentum. ELF is up 10%. Yeah, again, all these Chinese stocks are stocks that have exposure to China, whether it's ELF, Lululemon, Nike, etc. They've been getting some momentum. What about the cruise lines? Carnival Cruise is up 5.9%. Royal Caribbean is also up about 6%. Okay, so some of these consumer plays are getting some love right here. NVIDIA losing 104 back to 103. Palantir. Oh, Palantir's close. Oh, she's close. Oh, she's really close. She's like 10 cents away, dude. She's 10 cents away. Oh, do we do it? Do we see triple digits? Do we see it? Oh, it's teasing us. 99.98, 139,000 shares. Someone's got to buy it. Someone's got to buy those shares. Oh, there it is. There it is. 100 after how many months? After 2 months? Ladies and gentlemen, it is finally time to ring the bell for Palantir back to triple digits. $100 on Palantir. Wow. It's been a minute. It's been a minute. It's been a freaking minute. 100. Look at that, dude. That is more beautiful than the Mona Lisa. Okay? That is more beautiful than the Mona Lisa. That's not the big bell, okay? So everyone relax. It's not the big bell. The big bell is the one that called the top last time. This is the regular bell. This is the bell that's more, this is the humble bell. It's like, all right, we can celebrate, but we're not bringing up the big bell yet. Next time we bring up the big bell, I think it has to be at all-time highs, which is like $130. So until we get there, we're not bringing up the big bell. For those that don't know the big bell, it's a bell. You can see it in the background. A fan gave it to me in California. It has Palantir's logo engraved on it. We rang it at 125, and then the market tanked. So everyone thinks that bell is it's not the best for Palantir. But at least we can do the little bell for today. 99.89 right here on Palantir. We topped out at 158. Let's see if we get back there. I mean, look, we got through almost 150,000 shares on the wall. So I think there's a world in which if we can get through that many shares of resistance, then we can maybe maintain 100 for the day. Tesla right here getting back to some momentum, 249. That's back up to 5%. It was at 3%. Robinhood, wow, 46. Holy moly, that's up 9%. Even Hoodie really getting some love right here. 30 or 46 on Hood. So it broke through 45 easily. Palantir back at 100. Hood at 46. Grabs at 450. SoFi's back at 12. Meta 528. Ethereum just went red for a second. It's like slightly green. Bitcoin just went down as well. That's weird. So crypto took a little bit of a haircut just now. Everything else is still green. Everything else is still green. Is there any news? Is there any news? Is there any headline? I don't think there's any headline. Let me see. Let me make sure. I don't think there's any China headline or anything like that. Oh, shit. No, we got a headline. We got a headline. Well, this is just a... Oh, no, this is... Okay, so this is a new theory. Okay, here we go. Here's the headline. Trump may cut China tariffs to ease tensions. We talked about that today, but here is the specifics on, I think it's what Bloomberg has some sources on terms of what the tariffs could look like. The Trump administration is weighing major tariff cuts on Chinese imports, possibly by over 50% to reduce trade tensions, sources say. No final decision has been made and options remain open. One idea is a tiered system. 35% tariffs on non-strategic items. These are your shirts, your hoodies, etc. 100% tariffs on goods tied to national security. I don't think that's the craziest idea in the world. And then phased in over 5 years. Phased in over 5 years. Palantir still over 100 and Robinhood just below 46. Tesla right here at 249. Okay, so baseline 35% across the board, which is it's more than what I thought. I thought it would be 20%. That's a little aggressive, but the market's got to be happy with 35 versus 145, right? Then 100% on goods tied to national security. That's chips and pharma. I don't think that's crazy, and I think that's probably going to be negotiated. But I think there is a argument for why we need to have high tariffs on those two things, which is what the market wanted. The market wanted very like specifically targeted tariffs in the first place, and then phasing these in over 5 years. Phasing these in over 5 years. That's the headline from Bloomberg on what they think the new tariff plan might look like. S&P 500 continues to go green. It's at a high of the day, up 3% on the day. So this Palantir 100.65, it might be going for 101. It looks like this new tiered system is not enough to get the market to be upset, even though I think it is a bit more aggressive than what I thought the non-strategic tariffs would be. But I guess the market's happy with less than 145%. So that's what we got. And if it's going to be a 5-year plan, then maybe it doesn't have to happen immediately, which is another reason the markets can kind of look forward and go further from there. Wall Street Journal headline, Trump decided not to fire Powell after Bessent Lutnick raised concerns. Sources say White House lawyers were studying legal options for firing Powell. Okay, so that's not surprising. That's not surprising at all. I mean, when Trump said the media ran with that headline, that was pretty disingenuous. I mean, Trump literally himself said, if I want to fire Powell, I can fire him and he'll be gone immediately. So I don't think that was the media running with that headline. I think that was Bessent and Lutnick saying, hey, dude, you can't do that. And he was just like, all right, fine. I'm not going to do that. But to say he wasn't looking into it, I just don't believe that. I think he was definitely looking into if it was possible. He saw the pushback, saw the market reaction, saw the bond market reaction, and probably got afraid of doing that. 101 on Palantir. 101. Wow. Broke through 101 pretty easily. We got to 100, 5 minutes ago? 2 minutes ago? I mean, that was relatively quick. I didn't see the wall at 101, but it wasn't that aggressive. 101 on Palantir. We are back to the triple digits. Palantir now is a market cap of $236 billion. Let me check Salesforce. Salesforce is up 6% on the day. Salesforce has a market cap of $240 billion, so just a smidge over Palantir. Steve and I got into a conversation on Salesforce versus Palantir last night. Look, I'm not saying Palantir is cheap. I've never said Palantir is cheap, but there is a reason that the market has continued to give it this multiple. And in this macro, if you get the tariffs walking back, I mean, at this point, this is just algorithms that are taking it higher and a beautiful 4-letter word that's taking it higher. One of the best 4-letter words ever if you've been invested in a stock from the early days. And it's called FOMO. And I think this entire market is getting a lot of FOMO right now for people who just didn't take advantage of any of the dips. And people might be saying, you know what, here's the Trump pivot, I'm buying. And quite frankly, hedge funds, we looked at the stat yesterday, their Mag 7 exposure is the lowest in over 2 years. So, I mean, you got hedge funds that might be saying, holy crap, we didn't know Trump was going to pivot that quick, and they might be reloading. And that could be creating this momentum. Robinhood, 46.68. Let me check the wall for 47 on Hood. If we get a good earnings on Hood with good April momentum in their monthly metrics, we might have a chance to at least get back to 50 support. All-time highs is going to be tough, but $50 support I don't think is that crazy to see. 47, the wall on Hood is, oh, that's nothing. It's 8,000 shares. That's nothing. If we get the volume coming in, we should be able to get through 47. Rocket Lab, that's up another 11%. Look at that, 21 on Rocket Lab. Wow. Tesla still 248. TLT's up 88. S&P's up 3%. Bessent's going to be speaking in 15 minutes. Rocket Lab right here, $20.97. That's green. We should be getting a lot of data right now. We should be getting ISM, so that could also affect markets. Yeah, okay, we're going to be getting ISM in literally 20 seconds. Here we go. Okay, let's see. Here we go. Okay, PMI, the market wanted 51. We came in at 51.2. That's good. That's a beat. Services, the market wanted 52. We came in at 51.4. That's a very slight miss. That's not crazy. That's not enough, I think, to tank. And then manufacturing, the market wants 49.5. Let's see what we get. If it's in that range and it's not that low, then I think that should be okay. Overall PMI is green. Services was green, and services was slightly red, but it's a very small red. Manufacturing, let's see. 50.7. Wow, holy crap. We beat on manufacturing. Oh my. We beat on manufacturing. Yesterday, the Richmond Manufacturing Index was down 50% from expectations. Today, we beat 49.5 versus 50.7. It's a big beat. Market should love that. Or maybe the markets already knew, which no, markets didn't know about that. Look at where you new all-time highs. Look at that, 543 on the S&P. That's up 3.5% on the day. 3% up on the day. We were at 2.7. We just jumped up about 40 basis points right on that manufacturing data. That is bullish. Now, that's not the best for inflation, but then again, inflation's already coming down so dramatically. I don't think the sort of good news is bad news narrative can hold up for inflation. Rate probabilities for May have gone down to 4% in terms of a rate cut. So we're likely not getting a rate cut, and definitely not with these numbers, because the economy is, at least from this perspective, showing enough growth to not justify cutting yet. But hopefully in June, we end up getting that cut. S&P 500 right here up 3.15%. Where is SMCI and all the semis? Let's take a look at them. SMCI, wow, 13%. Is there an SMCI? Sorry, not all-time high, intraday high. That's what I mean, intraday high. You guys know what I mean. Obviously, it's not all-time high, but yes, intraday high on the S&P. Is there a headline on SMCI? Also, where's AMD? We haven't looked at AMD. AMD, dude, AMD is up 8%. Huh. All right, they're outperforming Nvidia right here. The CEO just tweeted something. SMCI CEO. Okay, it's not that serious. He tweeted about Earth Day. That's not that. I don't know if that's what's causing the pump, but SMCI 13.5%. Reddit's up 11%. Tesla 245. Now Tesla's got a red candle. Tesla's looking ugly. Tesla's going opposite the market. Market's going even further to intraday highs. Tesla is getting to intraday lows. Nvidia 104. Nvidia's catching back up to those levels. And then Robinhood, again, 8,000 shares away from getting to 47. It looks like there's a shot it can get there. Hims as well. Look at that. Hims up 11%. Yeah. Hims, even though I don't own this stock, you can't say that this isn't cheap. Even after this 11% pump, this stock is one of the few names that has a severely low price to sales compared to the growth that it has. And you've got the whole GLP momentum behind it. And you don't really need GLP, I think, to buy this stock. I think the stock has enough growth independent of the weight loss narrative. But this one right here, 11.3%, Rocket Lab 20.96. Again, Bessent's going to be talking in 12 minutes. Dude, that manufacturing PMI data was phenomenal. I mean, like, based on the other manufacturing we got yesterday, you would think there would be a little bit more contraction, but no. This was kind of what the market needed to see. And it seems like it's getting this, seems like we're getting some momentum. Ahmed, how much are you up today? All right. If anyone wants to put in the chat, you can put in the chat. Let me open up my portfolio. Oh, wow. That's a lot. Okay. 44,750. $44,750.74. I would imagine a lot of people are having some six-figure days. I mean, this has got to be one of the best days of 2025. This has to be. Like, this is, look at Palantir, 101.0. That's up to 8%. Dude, Palantir just moved up $27 billion in market cap. Like, when's the last time you had a Palantir moving as aggressively? Look at the S&P, 3.22%, 544. I mean, last time we were here at 544 was April 14th, and then the last time before that was April 9th. So we got to this level 2 times, then we tanked because Trump probably said something on both of those days that caused the tank. And now we're right back. And now we are right back. Brian's up 60,000. June is up 100,000. Mobius is up 130. Michael's up 9. Trader Status is up 15. Dennis is up 61. Yeah, I mean, this is going to be some big days. David's up 400K. Andy's up 26K. Now, granted, we lost all this money. Let's not forget. We lost all this money is just being rightfully returned to us by Mr. Market after losing it over the past month. But it's still nice, dude. It's still nice. Dude, I mean, Saratoga, is today the day? Can I finally get back to drinking regular, or do I have to keep drinking tap water? Like, do I have permission to finally get some Saratoga water? Brett's up 80K. Shout out to Brett. Brett's big in Rocket Lab. The only reason I really know about Rocket Lab is because of Brett and Matt. So for those that don't know Brett, he's one of the big people in the Rocket Lab community. And he must be feeling very nice today. He was OG Palantir, $7-8. So if you were early in any of these names, Rock Lab, Hood, Palantir, I mean, like today is one of those days where you are seeing a lot of momentum on positions that you might have been holding for the past couple of years now. NVIDIA right here, 103.65, Broadcom 179, S&P 500, again, 544. It's up 3.2%. Bessent Speaking in 9 minutes. He could change all of it, or he could get us to pump even further. Just depends on what he's going to say. Dude, why no Saratoga? Why are you guys so... There's so many no's in the chat about Saratoga. Goodness, bro. Everyone's against Saratoga. Where's Hoodie? Are we at 47? Are we at 47? Wow, 47 on Hoodie. 47 on Hoodie. 47.18. That is up 12% on the day. On Beneficial, thank you for the $5 super chat. Shout out to the Hood Bills. Hood Bulls. On Beneficial has been part of this Hood Bull community for a very, very long time. Look at that. Busted through 47 easily. Palantir still holding 101. NVIDIA 103.72. And Robinhood right here, 47.08. Just getting below 47, even with Bitcoin not really pumping right now either. Bitcoin was at 94, so Robinhood's kind of doing this based on the entire market. I mean, this is why Robinhood's such a volatile stock to own, but when things are green, Robinhood has even more exposed leverage because everything's green, and Robinhood benefits when everything's green. Carlos, thank you for the $6 super chat. Please, no fancy water. Let us enjoy this. Dude, you guys are so superstitious. Like, the day the market goes down 5%, I know all of you are going to be like, it's because of Mitt bought Saratoga. And I'm going to have to try to convince you guys it's not me. It's not the Saratoga. Although, if there was any day where I could afford some Saratoga, it's today. Let's see what Bessent says, but it's not looking that bad. NVIDIA right here, 103. All right, we're getting a couple red candles across the board. Robinhood, Rocket Lab, Palantir, S&P, couple red candles. Tesla as well. Tesla's having a good day, but and given those earnings, I don't think anyone can complain, but it's not like as aggressive as some of these other days. Dude, the SPY is not dumping. When you say this, it's when you guys say dumping, this is not, it went from 3.2 to 3%. That's not dumping, I would say. We get back down to like 2.2, 2.3. I'm like, okay, you got a little bit of a dump from that top. But I wouldn't say that's dumping it. That's a bit of a red candle, though. Yeah, we got a little red candle. People are probably afraid of what Bessent's going to say, dude. He says anything that's scary. I mean, yeah, this could turn into a dump. But right now, I don't think it's a dump yet. All right, who's selling? Who's selling? Is anyone still selling or no? Is anyone still selling or no? Everyone's just going to hold on? Dude, I think I'm just going to hold on. I don't think there's any desire to sell right here. I mean, like the only thing I would really think of selling is some of my Hood options just to de-risk a little bit. But they have earnings coming up next week. I think I'll see the earnings, right? Unless in the next 7 days, everything goes to shit again. I think they put up a decent earnings and hopefully kind of gets us back to that $50 range. NVIDIA right here, 103. Bitcoin right here, 93.5. Broadcom, 178. Again, S&P 542. That's still up basically 3% on the day. And then AMD, 92.65. Yeah, we looked at this headline, China tariffs coming down to between 50 and 65%. So he has 35% against regular strategic or non-strategic goods. And then he's looking at 100% for more specific national security items. So you might get the average at 50%, but it's going to be phased in from what we're seeing on the headlines over 5 years, which is good because it might not happen all at once. Also, I mean, look, I think those tariff rates could go down if China gives up some good concessions. And China, their Ministry of Commerce put out another statement this morning, and it wasn't really an aggressive statement. They said the U.S. should conduct dialogue with China on the basis of equality and mutual respect. So, I mean, they're basically saying, all right, guys, it's like now that you got rid of the crazy tariffs, it's time to like have a real discussion. And so who knows, maybe Trump can really get some good concessions out of China and justify everything we went through over the past couple months. But I do think those negotiations are going to take a little bit of time. All right, Bessent Speaking in 5 minutes. We are getting some actual red candles right now. I wouldn't say dumping yet, but it could turn into that pretty quickly if we go down another, I would say 40 to 50 basis points. So we got to keep an eye on this stuff right here. How bad does it start to become? If we ended the day at these levels, I think everyone would be pretty happy. But given we got to some higher levels, we got to see if we can hold up any of of this momentum. I really think, I don't think it's a headline. I think it's people are just afraid of Bessent. I think people have no idea what he's going to say, even though I would imagine Bessent's going to say something good. Now, maybe what people are afraid about, which is why it's causing a little bit of pain right here, is Bessent's going to highlight more things about China that take a hawkish stance. He's still going to be overall dovish, but he might be a little bit more hawkish than dovish, and that would create, hey, instead of having a 3% day on the S&P, we have a 1.5% day, which again, I'll take it, but it might not be the blistering green that we've been seeing over the past 20 minutes. Fear and greed. Let me check that right now. I think we're at 20 on fear and greed, a little bit above that. We're at fear. Wow, we're at 29. Again, I don't know how much this metric matters anymore, given now it's about deals. And based on what Trump announced last night, we did a decent pivot and hopefully we can get more deals. But 29 on fear and greed. I mean, look, if things come back down to reality and this euphoria goes away, we kind of get back to basically where we were last week, which is, it is what it is. But I think everyone, and not just retail investors, I think everyone is so desperate. Look at the S&P. It was down to 2.7, right back to 2.94. It is really trying to hold on. Like it went from 3.1, now it's right back to 3. It went from 3.2 down to 2.7, so that's a 40 basis point reduction. Now it's right back to 3%, eliminating or gaining back those 20 basis points. I mean, it is not really trying to give up these gains, even though it's being a little choppy. I think everyone is so desperate for 2025 to be the third year of a really good bull market that, again, every little headline is what takes the market higher. Because no one, when I say no one, I'm generalizing, but realistically, a lot of people did not think going into 2025 that the AI innovation of NVIDIA, ChatGPT, yada, 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 you can name a billion different things that are going on in technology, would be hampered in terms of growth by tariffs. I don't think anyone really believed it. And if you did, you've been short or in cash, which has not been the worst position all year. But I think most people thought it would be a choppy year. It's not going to be 25% back-to-back gains like we had 2023, 2024, but it's going to be a good year. And so far, it's been a crappy year. So I think any little headline that gives us the glimmer of hope that no, it's going to be a bull market. We're going to get back there. That's what the market's moving on. And as long as we can follow that up with actual substance, I think that's why we can hold this green. Let me check bond yields right now. The 10-year is still down 4.317, a little bit higher than what it was in the pre-markets, but at least it's down on the day. And the 30-year is also at 4.76. That's down. The VIX right now is down 8%. It is slightly up. It was down 9.2, so it's up about 70 basis points, but it's still down 8.5% right now. You know, a lot of you guys have hit me up about the fires in New Jersey. So where I'm at in New Jersey, I don't see any fires. Like I got a bunch of texts yesterday saying, hey, I hope you're safe. And I'm like, hope I'm safe. What? Safe from what? I was like, the futures are green. What are you talking about safe? I feel my money feels pretty damn safe right now that we got the tariffs down. But apparently there's a bunch of fires in Jersey. So yeah, for anyone in Jersey, I hope you are safe if you're caught up in the midst of it. But at least from where I'm at, like I was looking at those texts last night. I was like, what are you talking about? I feel fine. Have you seen the futures? We're up 2%. I feel fine. And they're like, oh, there's forest fires. I'm like, forest fires? What are you talking about? So, wow. S&P right back to intraday highs. Look at that. Or very close to intraday highs. Oh, wow. That was a big move. It was at like 3.5%, went right back down to 2.6. Now right back down to 3.2. Wow. Wow. There you go. Intraday highs, 545. We're at 544. Now we got to 545. This is moving like crazy. Robinhood right back to 47. Went to 46.50. Palantir should be right back to 101. Palantir very close, 100.56. Bessent's live. Okay. It said he wasn't. No, he's not live yet. I have him on the second screen. He's not live. Let me check a different news station if that one's delayed. Dude, that was random. That was a lot of volatility just now. No, Bessent's not live yet. He's not live. Okay, I'll switch over to Bessent in a second, but he is not officially live yet. Julian, thank you for the 10 euros. At what point would you buy Tesla? As I don't believe you hold any right. No, I do have Tesla shares. I don't have a big position in Tesla. Average like 360. I've been back a little year. But those earnings were not encouraging to buy Tesla. So I want to see over the next couple of weeks how this plays out and where we get in terms of China volatility, along with if we you're buying it today, I think you're buying it on hype. Your mic is weird. The Bessent's not live yet. Is the mic better? Is the mic better? Why does the mic always get bad in the moments where we need it? Oh, let me see. Let me see. Why does the mic always... No, it sucks. Hold on. Hold on. Hold on. Hold on. Hold on. We're good. Yes, yes, yes. We're good. Yes. Let's see. Let's see. Let's see. Yes, yes, yes. No. Yes. Bad. No. Okay. I don't know. Give me a second. Give me a second. We'll pivot in a second. Hold on.
So we've got the perfect guest, David, in the World Bank in order to talk about the impact that it's having on some of these developing market countries, the asset prices and what that's doing to these countries. I mean, everybody's here. Rachel Reeves, for instance, the Chancellor of the Exchequer, the Finance Minister of the UK, just getting into the US. She's got pressure to bring a draft deal to meet with Secretary Bessent here at the IMF. I mean, that's what's happening behind closed doors in this building. There's just this extra urgency where we're not just sitting around talking about productivity and inequality and how to, deal with AI. We're talking about getting things done, trade deals done with this White House and with this administration.
Okay, thank you, Sarah.
All right, how about now? Are we good now? Yes, yes, yes. I think we should be good. Bessent is not live. He's about to be live in a second. Okay, I'm going to Bessent. I will answer the super chat after Bessent speaks. So here we go.
It's an honor to be here. In the final months of World War II, Western leaders convened the greatest economic minds of their generation. Their task, to build a new financial system. At a quiet resort high up in the mountains of New Hampshire, they laid the foundation for Pax Americana. The architects of Bretton Woods recognized that a global economy required global coordination. To encourage that coordination, they created the IMF and the World Bank. These twin institutions were born after a period of intense geopolitical and economic volatility. The purpose of the IMF and the World Bank was to better align national interests with international order, thereby bringing stability to an unstable world. In short, their purpose was to restore and preserve balance. This remains the purpose of the Bretton Woods institutions. Yet everywhere we look across the international system today, we see imbalance. The good news, it doesn't have to be this way. My goal this morning is to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it. I have spent the bulk of my career from the outside looking in on financial policy circles. Now I am on the inside looking out. I am eager to work with each of you to restore order to the international system. To achieve this, however, we must first reconstruct the IMF and World Bank reconnect the IMF and the World Bank with their founding missions. The IMF and World Bank have enduring value, but mission creep has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. Bringing balance back to global finance will require clear-eyed leadership from the IMF and World Bank. This morning, I will explain how they can provide that leadership to build safer, stronger, and more prosperous economies all around the world. I wish to invite my international counterparts to join us in working toward these goals. On this point, I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system. Nowhere is the imbalance I mentioned earlier more obvious than in the world of trade. That's why the United States is taking action now to rebalance global commerce. For decades, successive administrations relied on faulty assumptions that our trading partners would implement policies that would drive a balanced global economy. Instead, we face the stark reality of large and persistent US deficits as a result of an unfair trading system. Intentional policy choices by other countries have hollowed out America's manufacturing sector and undermined our critical supply chains, putting our national and economic security at risk. President Trump has taken strong actions to address these imbalances and the negative impacts they have on Americans. The status quo of large and persistent imbalances is not sustainable. It is not sustainable for the United States, and ultimately, it is not sustainable for other economies. Now, I know sustainability is a popular term around here, but I'm not talking about climate change or carbon footprints. I'm talking about economic and financial stability, the kind of sustainability that raises standards of living and keeps markets afloat. International financial institutions must be singularly focused on upholding this kind of sustainability if they are to succeed in their missions. In response to President Trump's tariff announcements, more than 100 countries have approached us, wanting to help rebalance global trade. These countries have responded openly and positively to the president's actions to create a more balanced international system. We are engaged in meaningful discussions and look forward to talking with others. China in particular is in need of a rebalancing. Recent data shows the Chinese economy tilting even further away from consumption toward manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs. Of course, trade is not the only factor in broader global economic imbalances. The persistent over-reliance on the United States for demand is resulting in an ever more unbalanced global economy. Some countries' policies encourage excess savings, which holds back private sector-led growth. Others keep wages artificially depressed, which also suppresses growth. These practices contribute to global dependence on US demand to spur growth. They also lead to a global economy that is weaker and more vulnerable than it should be. In Europe, former ECB President Mario Draghi has identified several sources of stagnation, and he has outlined several recommendations to get the European economy back on the right track. European countries would do well to take his recommendations to heart. Europe has already taken some long overdue initial steps that I applaud. These steps create a new source of global demand and also involve Europe stepping up on the security front. I believe global economic relationships should come to reflect security partnerships. Security partners are more likely to have compatible economies structured for mutually beneficial trade. If the United States continues offering security guarantees and open markets, then our allies must step up with stronger commitments to shared defense. The initial actions from Europe on increased fiscal and defense spending are proof that the Trump administration's policies are indeed working. The Trump administration and the US Treasury are committed to maintaining and expanding US economic leadership in the world. This is especially true at the international financial institutions. The IMF and World Bank serve critical roles in the international system, and the Trump administration is eager to work with them so long as they can stay true to their missions. And under the status quo, they are falling short. The Bretton Woods institutions must step back from their sprawling and unfocused agendas, which have stifled their ability to deliver on their core mandates. Going forward, the Trump administration will leverage US leadership and influence at these institutions and push them to accomplish their very important mandates. The United States will also demand that the management and staffs of these institutions be accountable for demonstrating real progress. I invite all of you to join us in working to refocus these institutions on their core missions. It is in our collective interest to do so. The IMF. First, we must make the IMF again. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. These are crucially important functions to support the US and global economies. Instead, the IMF has suffered from mission creep. The IMF was once unwavering in its mission of promoting global monetary cooperation and financial stability. Now it devotes disproportionate time and resources to work on climate change, gender, and social issues. These issues are not the IMF's mission. And the IMF's focus in these areas is crowding out its work on critical macroeconomic issues. The IMF must be a brutal truth teller and not just to some members. Today, the IMF has been whistling past the graveyard. Its 2024 external sector report was entitled Imbalances Receding. This Pollyannish outlook is symptomatic of an institution more dedicated to preserving the status quo than answering the hard questions. Here in the United States, we know we need to get our fiscal house in order. The last administration ran up the largest peacetime deficit in our nation's history. The current administration is committed to fixing this. We are open to critique, but we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries. The IMF should push more proactively official bilateral lenders to come to the table early to work with borrower countries to minimize periods of debt distress. The IMF must refocus its lending on addressing balance of payment problems, and its lending should be temporary. When done responsibly, IMF lending is at the very core of its contribution to the global economy. When markets fail, the IMF steps in and makes resources available. In exchange, countries implement economic reforms to resolve their balance of payments issues and support economic growth. The reforms undertaken during these programs are some of the IMF's most important contributions to a strong, sustainable, and balanced global economy. Argentina is a fitting example. I was in Argentina earlier this month to demonstrate the United States support for the IMF efforts to help the country reset financially. Argentina deserves the IMF support because the country is making real progress toward meeting financial benchmarks, but not every country is so deserving. The IMF must hold countries accountable for implementing economic reforms, and sometimes the IMF needs to say no. The organization has no obligation to lend to countries that fail to implement reforms. Economic stability and growth should be the markers of the IMF's success, not how much money the institution lends out. World Bank. Like the IMF, the World Bank must be made fit for purpose again. The World Bank Group helps developing countries grow their economies, reduce poverty, increase private investment support, private sector job creation, and reduce dependence on foreign aid. It offers transparent and affordable long-term financing for countries to invest in their own development priorities. The bank, along with the fund, provides extensive technical support to promote debt sustainability among low-income countries, which empowers those countries to stand up to coercive and opaque lending terms from other creditors. These core functions of the World Bank complement the Trump administration's efforts to foster safer, stronger, and more prosperous economies in the United States and the world. But the bank, like the IMF, has strayed in certain respects from its initial mission. The bank should no longer expect blank checks for vapid, buzzword-centric marketing accompanied by half-hearted commitments to reform. As the bank returns to its core mission, it must use its resources as efficiently and effectively as possible. And it must do so in ways that demonstrate tangible values for all member countries. The bank can use its resources more efficiently now by focusing on increasing energy access. Business leaders the world over identify unreliable power supply as one of the primary impediments to investment. The World Bank and African Development Bank's joint Mission 300 initiative to expand energy access to 300 million more people in Africa is a welcome effort. But the World Bank must respond to countries' energy priorities and needs and focus on dependable technologies that can sustain economic growth rather than seek to meet distortionary climate finance targets. We applaud the recent announcement that the World Bank will seek to remove prohibitions on support for nuclear energy, which could revolutionize energy supply for many emerging markets. We encourage the bank to go further in giving countries access to all technologies that can provide affordable baseload generation. The World Bank must be tech neutral and prioritize affordability in energy investment. In most cases, this means investing in gas and other fossil fuel-based energy production. In other cases, this may mean investing in renewable energy coupled with systems to help manage the intermittency of wind and solar. The history of humanity teaches a simple lesson. Energy abundance sparks economic abundance. That's why the bank should encourage an all-of-the-above approach to energy development. Such an approach will make World Bank financing more effective, and it will reconnect the bank to its core mission of economic growth and poverty alleviation. In addition to increasing energy access, the World Bank can use its resources more effectively by starting to apply its graduation policy. This would allow the bank to focus on lending to poorer, less creditworthy countries. This is where World Bank support makes the biggest difference for poverty and growth. Instead, the World Bank continues to lend every year to countries that have met the criteria to graduate from World Bank borrowing. There is no justification for this continued lending. It siphons off resources from higher priorities and crowds out the development of private markets. It also disincentivizes countries' efforts to move away from dependency on the World Bank and toward job-rich, private sector-led growth. Going forward, the bank must set firm graduation timelines for countries that have long since met the graduation criteria. Treating China, the second largest country in the world, as a developing country is absurd. While it has been at the expense of many Western markets, China's rise has been rapid and impressive. If China wants to play a role in the global economy commensurate with its actual importance, then the country needs to graduate up. We welcome that. The World Bank should also implement transparent procurement policies based on best value. It must help countries move away from procurement approaches that prioritize only the lowest cost bids. Such procurement policies reward distortive and subsidized industrial policies that undermine development. They may also stifle the private sector and incentivize corruption and collusion and result in greater long-term cost. Procurement policies based on best value are better from both an efficiency and development perspective, and their robust implementation will benefit the bank and its shareholders. Related to this subject, I wish to send a strong, and I emphasize strong, message about procurement policies as regards Ukraine. No one who financed or supplied the Russian war machine will be eligible for funds earmarked for Ukraine's reconstruction. No one. To conclude, I invite our allies to work with us as we rebalance the international financial system, refocus the IMF and World Bank on their founding charters. America First means we are doubling down on our engagement with the international economic system, including at the IMF and the World Bank. A more sustainable economic system will be one that better serves the interests of the United States and all the other participants in the system. We look forward to working with all of you in this endeavor. Thank you.
Good job. Thank you. Mr. Secretary, thank you for joining us here today, and thank all of you for coming here today. I'm going to point out you have many great lines in this very meaty, comprehensive set of remarks, but you say, I wish to be clear, America First does not mean America alone. To the contrary, far from stepping back, you seek to expand U.S. leadership in international institutions like the IMF and World Bank. I must say there's a collective sigh of relief across this town right now, because the concern coming into this week is that you were going to do exactly what you said you're not going to do, which is the U.S. would withdraw, but you want to lead. What you're asking for is simply getting back to factory settings, right? Focused approach, and deal with the issues that you see are most paramount, correct?
Correct. As I said in my confirmation hearings, I think U.S. engagement with the international financial and multilateral institutions, we should engage, and we should be in it to win it for the American people and for the rest of the countries and for the client countries.
20 years ago, a senior US Treasury official gave a speech very similar to this, calling on the IMF and said the IMF was asleep at the wheel and dealing with imbalances. Hank Paulson started the Strategic Economic Dialogue with the Chinese. Every Treasury Secretary since then have had an approach. So how will you do this differently? And how do you think that you'll proceed in this approach? What is your philosophy? What is your tools? And how will you execute on this?
Well, look, I think that our moves toward reordering the financial or trading system is a start. I think that today, as I reaffirm our engagement, but set up a list of core principles and back to basics for the institutions, and again, being from the private sector, we want to see results. And we want to see timelines that, as you and I were talking about backstage, global rebalancing has been a topic for more than 20 years. And it's, some countries may have a 100-year perspective. We don't.
Right. China obviously is an important part of this administration's foreign and economic policy. You'll be meeting with your Chinese counterparts. What will you tell them in the sense of how they obviously are aware that there's huge imbalances? Their manufacturing capacity is enormous, especially in things like automobiles. How will you help them understand that it's not just about talking, it's about executing?
Well, look, I don't think I have to help them understand. I think they understand very well. And it's just a matter of impetus and will. So I believe I first went to Japan in 1990, 91, within 12 months of the peak of the bubble, a decade of that unwind, a decade of malaise. And then in 2012, I ran across a fellow, 2011, who was running for prime minister named Shinzo Abe, and he knew that Japan needed change and implemented it very quickly. 10 years later, more than 10 years later, Japan has had a remarkable economic run. And I think that our Chinese counterparts that will come to this realization, and if some of our policies, sometimes it takes an external push.
Right.
Alternatively, what I have said previously, there is an opportunity for a big deal here, that the US is looking to rebalance to more manufacturing. The identity of that would be less consumption. If China is serious on less dependence on export-led manufacturing growth and a rebalancing toward a domestic economy, I think they use the term dual circulation. Well, right now it's really singular circulation. And if they want to rebalance, let's do it together. This is an incredible opportunity. And I think if Bridgewater founder Ray Dalio were to write something, he could call it a beautiful rebalancing.
Indeed. But a big part of that will also be our own fiscal imbalance. And as you mentioned, we're running deficit 6% of GDP at the top of the cycle. Not sustainable, as you yourself have pointed out. How important is it to also address this large?
Very important that economists and everyone knows that a trade deficit, external trade policies can be tariffs, current state subsidy of labor and means of production. our policy, and the dollar will adjust based on markets. Everyone asks me, well, what does a strong dollar mean? And to me, the strong dollar means having the policies in place to deserve capital flows and have confidence. But it doesn't mean that the price on the Bloomberg screen every day. And it also has different meanings in terms of bilateral the prices. So it's really three-pronged. But Tim, to your question, I have talked about we did not get here quickly with the spending. The U.S. does not have a revenue problem. We have a spending problem. And I have suggested when I first met President Trump to talk about joining his campaign 2 years ago that we need to get back to a long-term sustainable budget deficit of something with a 3 in front of it, which works. We have 2% nominal growth or 2% inflation, projected 1.8% growth, which I think could be much higher if we implement our economic policies.
You reaffirmed the strong dollar policy first articulated by Bob Rubin. Valerie Giscard d'Estaing in the 1960s talked about U.S. exorbitant privilege of the dollar. There are some in this town who question that privilege and actually see it as a burden. Do you see it as a privilege?
That the U.S. sits at the center of the global economy is enabled by the use of dollars, and that it's natural that the usage would come down over time. And I think that the U.S. will always, for my lifetime, be the reserve currency. I actually am not sure that anyone else wants it. I can't remember, one of the European officials said today, maybe it was Mr. de Guindos, I can't remember, said, oh, well, the euro could become a second reserve currency. Well, we've just had a substantial appreciation in the euro. For export economies, it's a lot of pressure. And look, I think that the reaffirming our belief in these international institutions is also part of that.
You mentioned the euro. You mentioned in your comments Mario Draghi's report from last year. There was the letter report. Before that, I've been spending a lot of time in Europe. There does seem to be a much more a buoyant atmosphere in Europe. They see this as an opportunity for them. I said something about a possible renaissance. I was heckled a bit, but I actually am pretty positive on Europe. Do you think this is an opportunity to shift some of that demand? The world has relied on U.S. final demand to shift some of that demand for Europe. Is this a positive time for Europe?
Look, I think it can be. And it wasn't in a straight line. It wasn't always the way a trained diplomat would have done. But I think we should all congratulate President Trump. He has done what a succession of European leaders have tried to do for the past 26 years, since the advent of the euro, that whether it's the French, the Italians, other European countries have tried to get Germany to increase their fiscal spend and drive the European economy. And that I applaud these nascent efforts, because it's a combination. It's a combination of economic stimulus, and it is a combination of burden sharing on the European continent for defense. And as I said many times before, economic security is national security is economic security. So if this European plan works, that I applaud it. I had a private meeting with the Spanish finance minister last week, 2 weeks ago, and he said, you're going to be pleasantly surprised with where we go on military spending, and that this 2% number today, he was right.
So you're already taking on the these tasks. You have China, more consumption, less investment, deal with their manufacturing excess capacity. Europe's an great opportunity. The U.S. rebalancing here, including on fiscal. So what do you want the IMF to do? What would you like to hear from Kristalina over the next couple of days, or the board, in the new direction, again, back to factory settings direction? What do you want to hear from them?
Well, again, I think it's just been mission creep.
Yeah.
And just occasionally you have to trim your garden when the weeds grow. And I think that it's back to basics. What are our priorities, and how are we going to judge success?
And the World Bank, you discussed about graduating the medium-sized countries that should have graduated some time ago. That changes the commercial model of the World Bank, but obviously you think that's important, that they need to be graduated.
Yes. Yeah. I mean, it's just, as President Trump says, it's common sense that that you can't have the second largest economy in the world. And it's as I said in my speech, I applaud their rapid growth, but you don't get both. There is, I have a teenager who sometimes wants to be treated like a child, sometimes wants to be treated like an adult, and
I got one of those too.
Yeah. And it's an adult economy.
You mentioned energy, specifically nuclear, during the campaign, and since you've become secretary, you've talked about energy production is one of your important legs. The U.S. produces about 13 million barrels of oil a day, the largest producer in the world. What more do we need to do here, and how can the World Bank, what do they need to do more to encourage fossil fuels as well as nuclear, and I assume all the above?
Yeah, look, the sine qua non for economic growth is energy abundance. And we need to drive the right combination of the crawl, walk, run for these countries in terms of sustainable production. But by sustainable, I mean robust and baseload,
Right.
not what I would call almost a luxury belief that we have in the West. Like they are worried about pumping water. They are worried about heating their homes, running their hospitals. And we've seen that the intermittency doesn't work. Even kind of in middle developed countries, maybe like South Africa, that seems to have rolling blackouts.
Right.
So that's not a model. We want to have a model of strong baseload and then bolting on the alternative production, as opposed to beginning with alternative production and then having this latency or intermittency that makes it impossible to industrialize.
In the final minute or two, let me just turn to financial intermediation. You know, there's a famous adage that capitalism without capital is just another ism. The institutions you see here are important intermediaries, both in the capital markets and in other forms of financial intermediation. What is your vision, especially for the U.S., in terms of financial regulation? What do you want the industry to look like? Obviously, the capital markets, the U.S. is a crown jewel of this economy. How should we encourage that not only here, but abroad?
Well, I think that I've been getting a lot of questions on private credit, and I think that private credit is an interesting addition to the U.S. mosaic, and it is the depth and breadth of our capital and credit markets that powers the U.S. economy, and it's the innovation there. I think that private credit's a very new and interesting part, but it is happening outside of the regulated ecosystem.
Right.
And I always like to say, I'm not an economist, I'm an economic historian. And I think that is a distortion of the system. And it tells me that the post-2008 regulatory corset is too tight on the regulated institutions. And we want to deregulate them or make them more able to provide the opportunity to lend to the American economy and perhaps into the international economy in a smart, safe, and sound way. as we've seen, the history of financial crises is a overreaction on one side, and I think that we had a regulatory overreaction. I convened something in the U.S. called FSOC, the Financial Stability Oversight Council, which convenes the regulators, and I think through partnership with the 3 U.S. banking regulators of Federal Reserve, Controller of the Currency, and the FDIC, we can come up with a system that makes the regulated financial system prosper again. And what the U.S. has that is different than most other G7 countries is just the number of financial institutions. We don't have 5 big banks, 3 big banks. And in the US, the community and small banks, which are provide 70% of agricultural lending,
Right.
40% of small business lending, 40% of real estate lending. And in the US, we've had this incredible boom on Wall Street. I think Wall Street can continue doing well. But I think it's Main Street's turn to share in the prosperity. And I think it was the pullback by the small banks, the post the GFC, that's kind of created this stagnation on Main Street. And we're determined to fix that.
Mr. Secretary, I always say Treasury is the sober voice of reason. What we've heard today from you is a sober voice of reason. We wish you all the best. Ladies and gentlemen, a round of applause for Treasury Secretary.
Thank you.
All right, there we go. That was Mr. Scotty Bessent, who has continued the pump on these markets. We are still holding on to some pretty strong green momentum right here as we get into the latter half of the day. We got through the 10:30 slam. There was a little bit of a slam right there. We had some red candles, but a lot of these stocks still gaining a ton of momentum. I'm sorry for the stream lagging at like the middle of him talking. It's not because of the Wi-Fi or the internet. Pound right here up 9.3%. It's literally because I have a lot of tabs open. This is the 3rd time it's happened in the past 2 weeks, and I'm getting really annoyed at it. I don't know. I got this Mac in 2023. It was a $2,500 computer. I thought I could handle having a couple tabs open, and apparently it can't. But Palantir can definitely handle another dollar higher. 103, baby, on Palantir. My goodness, 9.6% on the day. Palantir is almost the same price as NVIDIA. Obviously, market caps are different, but still incredible. And then Tesla right here, 256. That's up 7.7%. What a day from Palantir. We have not had a 9% day in what feels like at least 2 to 3 months. But there you go, 103 on Palantir. So in terms of the computer thing, I think I'm just going to get another Mac. I know a lot of people are saying PCs. I've had PCs for all my life. I really like using Macs more, and I'm just going to upgrade to 32 GBs of RAM because like it can't be lagging just because I like literally what I did when Bessent was speaking. I clicked on another tab. I just clicked on another tab. I think I clicked on the fear and greed index and then boom, it like lags. I'm like, what? Like, so I think I'm going to trade this one in. Hopefully I'll get a little bit of cash for this, and I'm just going to get a new computer because this is stupid. It can't be lagging in the middle of this stuff. But you got Palantir right here, 102.95, S&P 500, 544. That's up 3.2%. Robinhood, 46.23, still below 47, but not giving back a 10% day, basically up 10%, 9.87%. Look at the Qs. We're up 4% on the Qs. We're up 4% on the freaking Qs, which is just incredible. Rocket Lab still up about 11%. HIMS is up 12%. SMCI up almost 13%. Royal Caribbean and Carnival, they're up 5% respectively. Reddit's up 10%. Tessie was all the way back down to 246. And you got Tesla right here, currently right now at 255, which is pretty damn incredible. Pretty freaking incredible. The semi ETF, yeah, that one as well. SMH up 7%. This one has not had a big green day in a long time. That one up 5.4% right now, but that is green as well. Yeah, you guys are right. It's not just about the RAM. It's about the like I'm looking at the Apple computer right now. I need the 16 core CPU, 40 core GPU, and then the 48 gigabyte unified memory. Right now I have the 14 core and the 32 core. Actually, no, I have lower than that because that's 3,500. I paid 2,500 for mine. So yeah, I think this model from like late 2023, it's a good model, but I don't think it's a model that's meant for the amount of streaming that I do every day. So we got to upgrade. It is what it is. We got to upgrade, but yeah, it's always annoying if it lags. It's because it's not like I was doing something. I just clicked on another tab. Like it shouldn't be lagging because of that. So I'll try to go and upgrade it today because this is happening too many times now. So hopefully by tomorrow we'll have a new computer here. NVIDIA right here, 104.20. That's up 5.5%. Palantir still going. It's not stopping. We hit 103.62. So we are seriously getting a decent chunk of momentum. Okay, so let's talk about what Bessent just said. Bessent said a couple things. So number one, he said that China cannot continue on the path that they are on, aka China having this unsustainable type of economy where with the majority of their growth comes from essentially sucking money out of the US. So he said, hey, that's unsustainable. He said that the majority of their demand cannot just be for the United States and that they are harming themselves and the entire world. He then said America first does not mean America alone. That was bullish, right? It's nice to see him say, hey, I mean, even the interviewer said, hey, we're really happy that you're acknowledging that you guys aren't literally isolating the world, which look, the United States they're not literally isolating the world, but obviously the perception is that they've engaged in a lot of isolationist rhetoric. And Bessent's not that type of guy, right? Bessent's not an isolationist type of guy. I mean, he, I think, wants to cooperate with the world. He doesn't even like the concept of tariffs if you look at his previous stuff. So I think from that perspective, this was good for the market to interpret that Bessent's going to keep Trump in the sort of integrationist policies versus intervention versus isolationist policies. And then he also said more than 100 countries have approached us on trade, which again, he's been saying this every single other day. But at least on a day like this, I think the markets are believing him more and more, that more and more countries are coming to the table and they want to talk. Palantir right here, 103.8. Again, it's not giving it up that easily. It's really not. 103, basically the high of the day. 103.6 was the high of the day. Could I see it falling back to like 97 or 100 today? Sure. Like we could go back down if the whole market comes down. But if the market stays up the way it's up, Robin at 46, S&P up 3.2% on the day. S&P basically at intraday highs. I think Palantir holds on. Now, why is Bitcoin down? You guys are right. Why is Bitcoin falling here? That is interesting. If Bitcoin was mooning, hoodie would be up even more. Well, one could argue that people are getting out of sort of safe haven assets. Now, I know Bitcoin's not a safe haven, but it was acting like a safe haven over the past couple of days, right? So maybe they're getting out of Bitcoin and they're going into Tesla, NVIDIA, companies that have free cash flow and earnings and all that stuff. Granted, I also think this is just Bitcoin being Bitcoin. It's just being volatile today. And so it's up a lot. It's up like $10,000 over the past couple of days. So a little bit of volatility here isn't that crazy. NVIDIA right here, 104. TLT still up 1.73%. Tesla 256. Yields are a little bit higher. They're still red for the day, but they're not as red as they were before. So you got some people selling off yields right now. It makes sense, maybe going into stocks. And so that's kind of natural. What you see, again, yields can go up if stocks go up. If stocks go down and yields go up, that's when we have an issue. So if yields continue to go down, that would actually not be a horrible thing, but if they go up, it's also not crazy if stocks continue to go up. S&P 543, Palantir 102.90, again holding that 100 level, and then the Qs 462, up 3.94% on the day. It's trading with gold, yeah, to an extent. I mean, one can argue that it is it's outperforming gold in the past couple of days, but it is at least today trading with gold. Celsius is flat. Wow, huh? That's interesting, dude. On one of the greenest days that I can remember in 2025, Celsius is flat. I guess that's the price of being the hedge all year, is that you go flat on the green days, which is incredible. Also, the quantum names doing great. Shout out to Tess. She's been a big bull on quantum for a very long time. QBTS, look at that, up 13.9% on the day. So you got all the quantums having some fun. Rigetti right here, that's up 6.24%. And IONQ as well, up 7%, which means a lot of the names that were a bit more speculative, they're getting some green. Same thing with GameStop. It's flattish, but it is green. And then AMC, let's see that one. That one's also flat, but green. What about Webull? Webull is down. Good. Okay, so this is good. Webull should be down. Just because it's super bullish doesn't mean that this stock gets to go to the moon again, right? That's more unhealthy. But seeing some of the other speculative names like the quantum companies get some love, regular growth stocks get some love, and then the overall super spec names like a GameStop, Webull and AMC, those being flat, I think is also pretty nice to see because money's flowing back into the names that have the most potential and are putting up the most growth. Newsmax down 3%. That's good. I mean, like we want to see these names lose capital and have that money pour back into the best companies. AMD is up 7%. That is correct. Some of you guys said there was an AMD announcement. I didn't see anything. If there is, let me know if there's anything very specific, but I don't see anything crazy on AMD. By the way, dude, Dan Ives is getting hit pretty badly by the Tesla bulls. I mean, and look, to take the side of the Tesla bulls for a second, like Dan raised the price target again. I mean, what do you expect? If you're an analyst and you decrease the price target one day and then increase it the next day just off of Elon saying one sentence, you know, a lot of people are not going to think that you're being that serious, but I do think a lot of people are giving him some unnecessary hate right here. But he raised the price target back to 350. So but Dan's always been flip-floppy on the price targets. I think his actual arguments are still valid. And he's been saying Elon needs to leave Doge for a long time, and Elon left Doge and the stock's up right now. So I don't think he's been wrong on that. It's just people get so annoyed if you go from 350 to 315 back to 350 over minuscule things. AMD, okay, so Semi Analysis, which is a semiconductor consulting firm, they put out a report on AMD today. It seems like that's helping. And the report points to real progress in AMD's AI software stack, stronger engagement with developers, and a clear push to compete with NVIDIA. All right, there you go. That's better than any JP Morgan, Goldman Sachs equity report. Semi Analysis is a really good consulting firm run by Dylan Patel, which, by the way, I've hit him up. There might be a podcast coming soon on that, hopefully later in the summer. I'll definitely be going to San Francisco later in the summer, and that's where he's at. So hopefully we can get him on the pod. But he has a lot of influence in terms of how people think about semiconductors and the overall industry. So that report seems to be helping AMD right here, up 6.8% on the day, and getting some momentum. Comedy, thank you for the €20 or 20 euro super chat. Love you, Amit. You literally made me worry a little less about life, and for that, I'll be forever thankful. Thank you for being here, Comedy. Appreciate you. Thank you all for being here. Thank you for the real ones who stayed, even as Bessent was glitching. I was like, oh no. And I thought it would only glitch for like 30 seconds, but it glitched for like 2 minutes. So thank you to those that stayed and waited until it came back. But no, I appreciate everyone who's here. I mean, look, this is the reason why we do this as a community, right? It's for these days. Like we go through all the pain and all through the sadness and all the gut-wrenching volatility to have a day like this where you see some of these stocks that bring back this momentum. So it is exciting to have a day like this, but sometimes you just really got to go through the pain to get there. But again, here's the thing, and I've seen people really divided about this over the past 24 hours, and based on the chat's response to the poll, 70% to 30%. I think you guys are more in unison on this, but there's a section of the population that thinks Trump caved, and he caved badly, and we didn't get anything out of this negotiation because it was never a negotiation. Because, I mean, you know, you talk about the art of deal, Xi Jinping, people are talking about the art of doing nothing, because the dude literally did nothing, and he got Trump to take down these tariffs. You got another section of the population saying, nope, this was the smartest thing ever. No one understands it. Art of the deal all the way. Trump played the cards the right way, and everyone's kissing the ring, and now Trump's going to give us some amazing deal. I wouldn't say there's one or the other as a definitive answer, but my gut instinct is that Trump folded. And I think Trump folded because the dollar was selling off and the credit market was selling off, aka bonds. When those two things sell off, again, one thing I've taken away from everything in the past 2 months, the bond market is king. And I don't think until you go through a credit event, which we got awfully close to, and who knows, maybe we could get there, but it seems like things have calmed down now. Until you go through a credit event, you don't realize how much the bond market is king. And as much as Trump thinks he has power over the markets and tariffs and yada, yada, and he does have a lot of power, but the bond market has more power. And I think the bond market clearly told him, dude, you can't keep doing this. Like, you don't have the cards. You don't have the cards to play on these 145% tariffs, and you've got to de-escalate. Because if we have a credit crisis, I mean, like, forget a recession. We get into some really bad situations, and then Trump's responsible for all of that. So Is there some level of art of the deal here going on? Yeah, maybe in different respects to get the other countries to come to the table. But Xi Jinping did nothing for the past 2 months. He did literally nothing. He did nothing. And it got Trump to get rid of the 145% tariffs and potentially renegotiate an entire new multi-tiered program, which is what the Wall Street Journal reported today, 35%, 50% tariffs, et cetera, et cetera. Pound right here at 102.5. So I think it's too soon to tell. I think after the coming weeks, once there is a deal in place, hopefully sooner than later, we'll have a better understanding of who really got the best out of this deal. But I mean, as of now, it does feel like there was a bit more capitulation than, negotiations going on right here. But again, I think we got to see, because maybe there's some stuff going on behind the scenes that none of us necessarily know about right now. What are the current tariffs? We all knew the 145% tariffs would come down. That's not caving. That's just stating what we already knew. Well, no. We all knew that eventually the 145% tariffs would come down, but they didn't come down for 2 weeks, dude. And that's why I think the markets were so upset. I remember saying this back on April 9th. I was like, these tariffs are going to have to come down. There's no way. I mean, they came down on April 22nd. So in stock market years, that's those 2 weeks might as well be, 2 centuries, because every single day these stocks have to deal with the scrutiny of the fact that we have 145% tariffs on China. And then it went away kind of when he went to 20% for Apple laptops and iPhones or whatever. But still, Amazon was at 165 because the majority of the stuff they sell is in China or from China. And they still have those 145% tariffs. But it came down, which is what matters right here. Palantir and Google. Looks like we got a new collaboration. Google and Palantir are going to collaborate to bring Google Cloud to FedStart and U.S. government agencies. This came from a press release just now. At Google Public Sector, we are committed to helping our customers execute their missions. Now we're expanding this commitment by adding support for Palantir's FedStart program, so public sector customers can utilize software and applications on Google's cloud-accredited infrastructure through Palantir FedStart. Okay, cool. This could be another reason why we're green. This could be another reason why we're green on Palantir. FedStart is Palantir's government software offering. They've been using it with a variety of different companies that want to sell into the government but don't have the credentials or accreditations, et cetera. You need IA level 5 at least, or IA level 6 to really sell into the government. Realistically, IA level 4. But if you want big deals, you got to get to IA level 5. Palantir is one of 3 companies in the world that has IA level 6. So it's very hard for companies to sell software into the government unless you have that accreditation. FedStart is Palantir's essentially program that allows startups to work with Palantir to be able to then sell into the government. Now, a lot of the startups that are using Google Cloud or just software government contractors that are using Google Cloud, they can now integrate with Palantir on FedStart. So bullish. It seems like the government business will continue to grow based on that. That's another catalyst. It's not the biggest deal in the world, but it is a deal that is probably something that I think most people were expecting to eventually happen. Palantir is already working with AWS with FedStart. So now they're just attaching themselves to all the other hyperscalers. They're also working with Oracle and Azure on FedStart. So Google was the obvious one to come next. Palantir right here, 102.15. That's up 8%. S&P 500, 542, and Robinhood, 45.59. We do have some red candles across the board. So we're not at 47 on Robinhood anymore, 103 on Palantir. S&P is not at 545. But still pretty damn green for the day, which is not bad. Cool. We got some good headlines, dude. We got some good AMD stuff, got some good Palantir stuff. Bessent pretty much said everything he needed to say. And then you got Trump with the pivot. It was an aggressive pivot. But we did get a pivot. Benny says the U.S. got humbled. China are going to think they have all the cards from now on if they can make America back down. So this argument I'm also sympathetic to. I'm also sympathetic to this argument. And I think people that say that the U.S. got humbled and that we don't have as much leverage as before. I mean, just trying to be so objective about this and not being political. When someone blinks first in a negotiation or they give up something first, which in this case, Trump gave up the 145%, that is the definition of giving up leverage, right? There's not even politics attached. If you're in a negotiation and someone says, I want this, and you say, no, I want this, and then that person does nothing, and then you come back to them and say, okay, I'll give you this. There is capitulation there. And whether that capitulation is going to result in a meaningful deal or not is yet to be seen. Markets obviously love it because the markets never thought it was reasonable. That's another good point, that the idea that we're going from 145% tariffs maybe to 35% or something, one of the reasons the markets are pumping so much is because they thought it was so absurd that we were at 145%, even though that was Trump's strategy, is to be maybe so chaotic and absurd to get people to the negotiation table, that when China didn't come to the table, that's when the bond market started screaming, because they were like, hey, what you tried to do didn't work. And then maybe Bessent talked to Trump and he finally had to admit, all right, we're going to take those down. Which, yes, decreases leverage, but at the end of the day, the market doesn't care, because that type of leverage, I think the market, especially the bond market, was basically saying you were never going to have that type of leverage because those tariffs are so unbelievably absurd that China was never going to negotiate from the first place from that 145%, even if you thought they would be intimidated enough to do so. And as a result, that's why we are seeing the momentum that we're getting right now. Hold on. Did Trump just say something? Where is Trump? Hold on. Where did this come? Is he talking right now? Where did you get this quote from? Did he post on Truth Social? There's no way this guy's live right now. There is no way he's live. He was supposed to go live at 5 p.m. for an executive order. It's freaking 11. Where are we getting these quotes from? Trump says the EU and China are ripping off the US. Okay, that's not what we want to hear after Bessent was very nice to China just now. Where are these quotes coming? What press conference is he doing right now? Dude, that can't be the reason why we're seeing red candles. He's live. I don't see him live anywhere. Oh, wait. No, that's Pam Bondi. I don't see. I knew he was supposed to go live at freaking 5 p.m. today. But where is he? Where is he live right now? Yeah, I'm seeing the Bloomberg headlines. Okay, so what might be happening right now is he might be in a meeting with reporters that either the media doesn't have access to, or there's always a delay on his public streams, and we might have to wait like 20 minutes to see the stream. He says we're going to make a lot of money for our people. We will have a fair trade deal with China. Okay, that's good. He's saying good stuff with China. Hold on. I have Trump's official schedule. Let me check what was on the 11 a.m. What was on the schedule for 11 a.m.? At 11 a.m., he's supposed to be receiving an intelligence briefing right now. Why is he talking to the media? It's a closed press. I'll show you guys this. At 5 p.m., he's doing executive orders. That's open to the press. Maybe he's doing something else right here. That's interesting. It's about to call Trump. Oh my gosh. President Trump just said we will have a fair trade deal with China. The European Union and China is ripping off the U.S. Shout out to Farzad. Farzad, thank you for being here. And appreciate you, brother. Now, wait, let me show you guys what Farzad's take was yesterday. So I asked a simple question on Twitter last night. Are we back to a bull market? Farzad actually had an interesting take, and it goes into the context of what we were talking about with negotiations. Farzad says, I don't think so. The worst is yet to come. Things need to be at a literal near breaking point before one side truly folds. Otherwise, you can't exert maximum leverage. Shit's about to get wild. So in Farzad's opinion, in order to reach a real negotiation, which again, we haven't reached any negotiation yet. We just have like a preliminary Trump walking back some of the tariff stuff. You might have to see some real pain before we actually get meaningful negotiations. Now, one could argue to counter Farzad's point right here is that when the bond yields were screaming at 4.5% on the 10-year, that could have been literal near breaking points, potentially. But we're going to find out over the coming weeks, and we're going to see how bad it gets or how much the market theoretically could have bottomed by now if the worst of the negotiations have already happened. But again, no one knows. And I think the market's kind of just guessing right here that, all right, if it's not going to be 145%, it can't get worse than that. And that's why we're seeing some of this momentum right now in the stock market. Robinhood right here up 9%, S&P still up 3%, Palantir up 9%. Let me see if I can get more of these quotes. We've got some reporters putting it out to the terminal right now. And that's why we're getting these quotes from Trump. This is his schedule, by the way. So you can look up the president's schedule every day publicly. As you can see, 11 a.m. intelligence briefing, 5 p.m. executive orders. I guess he decided to do a little mini press conference. The one thing you can't say about Trump, dude, is that he's not speaking to the American people. I mean, like, I don't know how many times Biden spoke in 4 years in front of the public, but it's got to be like 1/100th of what Trump has done in the first 4 months of his administration. Whether we like what he says or not is a different question, but he has obviously been taking every opportunity to speak to the American public. So Trump says we're going to make a lot of money for our people. Trump says we'll have a fair trade deal with China. Trump says the EU and China are ripping off the US. Those are the core 3 quotes that we have right now. Farzad says, I'm a fan of Trump communicating often. So am I. I know we make a joke of like, hey, like, I wish he stopped talking, but I am a fan of him speaking every day to the American people. And by the way, he's engaging in such a new economic paradigm of new tariffs and all this different stuff, where like he's kind of flipping the entire script. You kind of need to be talking to the public every day, because if you're not talking to the public every day, then the public starts to lose trust, and you need to reaffirm your commitments. Now, the person who I've not heard from in about a week and a half is Mr. Lutnick. I've heard a lot of Bessent. I've heard a lot of Trump. I have not really heard from Lutnick or Navarro. So maybe Trump told them to take a little bit of a back seat in terms of everything that's playing out right here. Let's get one of our favorite analysts on the show who just joined backstage. I am very curious to see how he is thinking about the bright green that we have right now and what he makes of Mr. Bessent's comments. You guys know who I'm going to bring up. 50% of you are going to get mad. 50% of you are going to love it. But that's why he is the person that he is. Look at that. Christopher.
Dude, thank God Bessent actually said what he said on there. One of the things that's been a little bit on my brain is you have this understanding that what the Trump administration is trying to do is do Project 2025. And one of the things in Project 2025 was that that the US would leave the World Bank, leave the IMF, basically become an isolationist power. And that's not good, because the World Bank and the IMF is a way that it's the system of Bretton Woods that built up like how all these countries interact with each other, right? And how the US basically maintains, a basic say on how the world develops. Now, one of the things that I think, and I hope people do the research and find out after this, how the World Bank and IMF actually work. Both of them have dual mandates. Like the IMF is there as like an emergency backstop. If something like economies go to shit, the IMF comes in with money that basically lets you get out of a jam, right? Yeah. And then the World Bank is set up so that all of that money goes towards developing nations to help them graduate and become better, right? So if you're, let's say, a poor country, you want that country to eventually develop, right? But you need infrastructure, you need roads, you need things that are, education, so that this way your country develops and becomes, part of the world community. And we all benefit.
Argentina, they've had a lot of loans from the IMF.
Right. And we all benefit, because what happens is that makes the standard of living around the world go up, and that opens markets. Now, the one big thing that Bessent mentioned here in regards to China is that its status as a developing nation is under question. And instead, it should be graduating from that. And the reason for that is very important, because as a developing nation, there are a lot of responsibilities that happen in the IMF and the World Bank in terms of monetary contributions that China doesn't have to necessarily do. And so they get voting power, but they don't have to pay into it, right? And that's one of the criticism I'm guessing that he had. The other thing is, it also, there's a layer of transparency that comes in too, where China can be a little bit more shadowy in the way that they report certain things. So if they report, and basically they're allowed.
Real quick, China is a developing nation in the context in the IMF's like metrics right now.
Right, because the way that they do it is by per capita GDP. So there's 1.4 billion Chinese. They're the second largest economy, but at the same time, if you take the per capita GDP number, they're not that rich, right? But they have a lot of rich people. It's just that That's how the system is. So so they get a lot of benefits for being a developing country, while at the same time actually being a pretty large economic power. And one of the major things that I think Bessent is trying to do is get the Chinese to be a lot less focused on exports and be more focused on being is Tesla up 20%?
No, it's
The hell?
up $20, but it's up
8%,
9%.
$20. Okay. I was like about to say, I was like, damn. Talk about me being right.
Oh no, you did say they wouldn't tank.
I told you, so Elon was gonna pump it. So it is what it is, you know.
Yeah, I mean, as long as he said anything about Doge that was positive, then there you go.
Yeah. I think this is the US is doing a good job of highlighting certain things that are technically unfair practices, where the Chinese have this economic model where they are always developing and manufacturing. And the reason why they get the benefits of doing that is because there's a lot less scrutiny around their ability to subsidize all of this manufacturing. Now that technically lowers prices, and that get on goods, and that sends it overseas. The challenge that you run into, though, is that if you do it at the scale that they're doing it, you're crowding out other parts of the world, and then you can kind of subjugate them a little bit. Because what happens is, like right now, like if you look at how the Chinese have financed all of these projects around the world, do you know the story about the port in Sri Lanka and Pakistan? What happened?
I've heard of this, but no, I don't know the details.
Okay, so the Chinese, as part of their Belt and Road Initiative, because I think this is one of the things that this policy is trying to kind of counter. So poor countries will take money from China and, basically as loans for development and everything else. So you build your infrastructure. Now, if you don't pay your loans, and a lot of these loans are somewhat predatory, depending on who you ask, they could end up costing you sovereignty over certain things. So like in Sri Lanka, they have a port that they basically, that the Chinese, in lieu of payment, just said, we're going to take it over. And now it's like I think it's a military base, like a Navy base over there. And that's like, India's like, whoa, and so that's the kind of stuff that they have, especially, and same thing in like Africa and also certain parts of South America, where, like I said, the Chinese have come in with low interest loans, and basically, done like this like post-colonial colonization effort, where basically, if you look at how the colonial system worked, is that the resource-rich countries would do all the work, and they would send all the raw goods back to their country, and then they would sell those finished products at huge markups back to that country, and at an inflated price. Right. The Chinese are doing similar things in Africa, where they're extracting all the value by taking, like, let's say, minerals and stuff like that, sending it to China, refining it, and basically making products. But the economic benefit doesn't come to the people in Africa nearly as much as the benefit that goes to the Chinese.
And you're saying Bessent's trying to stop that?
Slow it down. Now, I wouldn't say completely stop it, because, I mean, if you do that, you're pretty much going to anger the Chinese. But I think you want to lessen China's role, like ability to project its influence around the world. And the thing is, it's easy to do that if you have money and they don't, right? And so what happens is you can actually dominate their political circles, and then the problem that you end up getting is that you get this model where this is technically the US's model, which the Chinese are following. If you give money to somebody, they essentially become your slave, right? Because now they owe you something. Now slave is too strong of a word. They're basically
they're indebted to you, which means
right.
You have so much leverage over them that
right. So if you go to any institutions that are world leading institutions, you can get those block of countries that are indebted to you to vote in the same thought as you do, right? So if, let's say, right now there's all these African countries that the Chinese have basically put money towards and basically support the political leadership over there, they're going to vote based on what China says, not what's based on what the world is actually need, right? So it's indentured servants, so, right? Like an indentured servant thing. So I mean, the Chinese are not wrong for doing it, in my opinion. I think the Chinese are just following how, like basically creating a system that benefits them in terms of soft power. I mean, that's what every country's basic goal is. So you can't hate on the Chinese. The Americans don't like it, of course, because it's done based on the back of the U.S. consumer, right?
So based on what Bessent said, to focus it on him, you think he said all the right things in this speech, which was bullish?
I would say you have to look at this like 5-10 years out. Like, do we want to live in a world where China has a large say in world matters, or do we want it to be multipolar where the US is still technically like a leader? That's the real question that I think everyone is probably like wondering in their brains.
Okay,
right?
so then here's the next question. Obviously, Bessent said all the right stuff, and he's trying to get some of the China leverage to come down. What is your take on the Trump pivot? Like, tariffs going down from 145%, not firing Powell. Was this the right move? Was he caving? Like, how do you interpret what happened last night?
I mean, Trump's got ideas, and sometimes the ideas can be good ideas, but the execution can be flawed. So I think the tariffs thing, and this is something that we all kind of knew, like if you had done tariffs that were reasonable to bring down trade barriers, 5-10%, everyone could have got behind that. The market would have rallied and said, yeah, you know what? The current system right now is fraught with a lot of unfair practices by certain countries. And even if you layered it on as a broad implementation, as long as you did it at a reasonable rate, some of the fallout could have been contained by the exporters. Some of it could have been contained by our consumers. Some of it would have just been margin hits to businesses. But when you go to that level, you're basically doing a trade embargo against the entire planet, because
Right.
the cost, it would just be astronomical. So I think that the execution was very flawed. So if they had gone to real reciprocal tariffs where, you basically had single digit tariffs, I think the market wouldn't have, I think it still would have been down, but it wouldn't have been down a lot. And I think a lot of businesses would have been able to kind of just absorb it as a cost of doing business rather than it being a major policy move that could critically freeze out businesses. And that's the other thing too. Like, businesses need time to adjust to things. I think American business is one of those things that we are really, really good because we're very adaptable in how we do business, right? So, if you give us the time to slowly get to that level where we can, bring manufacturing back, quote unquote, I think certain things are never coming back, but there are certain things that if they did come back, you're going to need time for it to happen. Like, here's an example. I personally think shipbuilding should come back to the United States to a degree, right? We need a strong Navy in the future to basically keep the world trade balanced. The challenge is we build 1 or 2 warships a year right now, and it's not sustainable. So if we're ever in a prolonged conflict, then we need to replenish our Navy. You need shipyards to do it. Now, if you don't have shipyards, what are you going to do?
This is what Palmer Luckey's been saying as well. It's just like we don't have the supplies if we do get into a conflict to even last more than a couple weeks. But okay, so here's another question: was this art of the deal?
No, this was not art.
You don't think there's any level of maximum 145% pressures? I walk it back because I got something.
No.
You don't think he got anything out of this, or you think it was just a desperate move to get out of it?
No, I think Peter Navarro somehow convinced the Trump administration, I shouldn't say Trump administration. Fuck it. I'm not going to blame the administration because clearly we see that there were cooler heads in the room trying to prevent this bullshit from happening. I think this was Peter Navarro being able to influence Trump in saying, hey, look, this is how you should roll it out. And Trump saying, yeah, let's go with it. I think it's a good idea. And basically, the minute it comes out, screws the entire market. Navarro's able to convince him, don't worry, everything's going to be okay. And markets are just crashing. And every day that more and more pressure is coming on. And over time, Navarro's, ideas are being drowned out by Wall Street coming in. Like yesterday, Trump, was it yesterday or the day before, Trump met with the leadership from companies like Walmart, right?
Yeah.
Like CEOs, like these are multi-billion-dollar businesses. And they're saying, look, if you do what you're doing right now, you're basically going to cause a Great Depression. Now, at that point, when you hear something like the Great Depression, Trump's like, listen, I can have the people deal with pain, but I can't have them deal with depression, because that's going to be like legacy destroying. So I think the cooler heads came in, were able to convince him to get off of this. And I think they're back in charge now. And clearly today you're seeing a lot less of Navarro, you're seeing a lot less of Lutnick, and you're seeing more of Bessent. And I think that's what the market is kind of like adjusting towards, to say, look, the Trump administration's policies long-term are going to be good, but that doesn't mean that we have to sustain a period of pain, like a giant period of pain to get to that end goal. Navarro doesn't care. Navarro's an ideologue. He'll say whatever he thinks, like, and he'll go to the extremes without actually thinking, like, what are the consequences for U.S. businesses, U.S. consumers, but more importantly, U.S. influence over the rest of the world. And I think that's been severely diminished. And I think that's something that is going to be a hard battle to regain again. And it's someone like Bessent could probably work in that role to, kind of calm markets down. At the same time, convince our trade partners that, we're in it to win it. And we're gonna do everything we can to not only support the U.S., but make sure that they don't get crushed by Chinese imports either. So yeah, I think this was good. Believe it or not, this is how a president should actually communicate. Like, I'm hoping that one day we get someone like this back in charge again, that someone that can articulate economic policy that's both beneficial for us as long-term, for long-term as Americans, of course, both financially and like, what is that thing called? And like militarily.
Yeah. And I don't think people are saying, oh, well, everyone knew the 145% tariffs were a bluff in the first place. I don't think you could just easily say that, because we had them on for 2 weeks. Literally, we had small businesses go viral because they had to pay this crazy 145%. They're still there. It's not like they've gone away yet. We still don't know what the new tariff rate is yet. And then number two, if it was a bluff, it didn't work. No. Right? Like, if you're in poker and you're bluffing and someone calls that's what Xi Jinping did. He called your bluff. He said, all right, give us your 145%.
The challenge is, the thing is, and that this is just like you said with poker. Like, let's say right now, it comes your turn and you're like, I'm gonna raise, like $50. Let's say you're playing a game, you raise $50. People are gonna be like, oh, you know what? Let's what's the actual real plan? But if you go all in, that's where you're gonna run it. That's the part that sucks. Like, you can't go all in. And the other thing is, the Chinese are a lot more prepared this time than they were in the past. Like, in the past, they kind of had to deal with it. We in the US, number one, we're still fighting inflation. No matter what anyone tells them, we need to get inflation down. Like, for long-term stability, we need it. Number two, our businesses are still very tied to China, right? And number three, we basically cursed out all of the other players on the table, So everyone's angry at us. And then you go after China. And then when China fights back, you expect everyone else to basically have your back. It's like, no, you can't do that. You gotta be soothing. You gotta be calming. You gotta basically. And the one thing that never made sense to me is, why go after Mexico and Canada? You could have, like, the Mexicans are ready to displace the Chinese. Like,
yeah, they're already getting a lot of manufacturing.
Right. Like, we should be encouraging, like, hey, listen, why manufacture in China and import it almost like through the entire Pacific Ocean and strengthen them? Why not strengthen Mexico to the point where, number one, if you care so much about illegal immigration, if you get Mexico to advanced country status, that is a strong neighbor to the south, and you got Canada, a strong neighbor to the north, and now you've got like this wall of impenetrability that no one can come after. But what do? You antagonize the Mexicans, you antagonize the Canadians, the two largest trading partners the US has in our hemisphere, and then you go after China. Like,
Kris, let me get your reaction to this. We got a news update right now. Okay, so 3 things. Bessent, he declined to comment on the Wall Street Journal story on lowering tariffs on China, but would not be surprised if they went down in a mutual way. That's part 1. Part 2, Bessent says we have no unilateral offer from Trump to cut China tariffs. And then part 3, Bessent says the full China trade deal may take 2 to 3 years. Markets are slightly getting hit on that, more than slightly. Is it bullish for a trade deal to take 3 years, or what do you think?
That doesn't sound bullish.
No. So it doesn't sound bullish, but my gut reaction is that means we have a gridlock for a couple years. But then again, we have uncertainty for a couple years too, right? So that's
uncertainty is not good. Uncertainty is really bad. Like, I think the key is, how are you going to convince the business community, and how are you going to support them through this time of transition? Like I said,
before we keep going, he did just say we're very close to a trade deal with India. So he says China's going to take long, but India, we are close to it. Continue.
Yeah, but the thing is, like, you cannot just move like all the supply chains to India in the next like 30 to 60 to 90 days. It's going to take time for that to happen. Not to mention, you need a ton of working capital to be invested into your small businesses and large businesses, whoever's purchasing. And then you also have to get India to invest in its entrepreneurs and get them to actually manufacture things. I mean, it's not as simple as, hey, let's just move our production to another country. Like, India also has to invest a lot of money in their infrastructure to make sure that the goods that are getting to us are getting to us in a timely fashion. So a lot of this stuff is going to take. This is not. That's
boy, our markets. Are we really tanking on?
I did not want to hear that, bro. That
is.
Oh
bad. My god! Every day, bro. Hood's under 45. S&P's at the lowest it's been all day. 530. We were at 545. It's at 537. The speculative names are starting to go really red, like a Weeble. Tesla's holding up, but there's the red candle right there from 259 to 254.
I mean, this is the challenge that we're gonna run into, man. God. I mean, hopefully this is a start to talking with China to get them to be a little bit more constructive with their trade thing. I hope the Chinese don't go insular and basically just cut, like, I don't know. The response from China is going to be a very interesting one to see.
Wait, but 2 to 3 years, bro. Hold on. That's like, I mean, like, if the
complete. Go ahead. Sorry.
Go ahead.
I was going to say, I don't think that's what counts. I don't think they're saying like you need 100% trade deal. I think you can gradually lower the tariffs down. No,
that's true. I think we can lower the tariffs down like tomorrow. But the question is, do markets need like a definitive agreement like they needed back in 2018, or do they need like 85% of the way and then like you work out the rest of the details over the next 2 years? Like, what does the market want right now? I don't think we know.
All I can say is, if your PE multiples were like, hey, I love companies at 22 PE, I'd say probably ratchet that down to like 18 PE, like maybe even 17 PE.
Well, that's a historical norm, so it's not crazy.
That's what I'm saying. That's what I'm saying. You better dial that optimism back a little bit, basically.
Also, yeah, in 3 years, his term is over. So, like, what? What do you mean 2 to 3 years? He's not going to be president anymore. Like, he's not going to get the credit.
And also, if the economy is weak and the midterms come around, I mean, a lot of the powers that Trump is utilizing to enact these tariffs could be taken back by Congress. In which case, now you'd need Congress to do all the tariffing, and I'm sure that the Democrats would probably roll back majority of them because
100%, 100%.
because they would want to be seen as a check against the Trump administration's policies, right? So it's kind of interesting. The Republican Party typically stands for free trade, right? And the Democratic Party is a lot more like protectionist, like because Democratic Party is like for the workers and stuff, and the Republican Party is the big business party. But it seems that Trump has basically flipped the script a little bit.
Let's get this coverage right here on this news, and then we'll keep going from there.
First time Bessent has sat down with a group of reporters in this way. So a lot of news here to cover, a lot of it focused, given the news cycle now, on China. First, given the reporting this morning about offers being out there that the president was willing to cut tariffs on China potentially in half, Bessent says there has been no unilateral offer from President Trump to cut China tariffs in any significant way. He said he would be very surprised if that conversation was happening. He did say sort of what we heard yesterday, that both sides believe this situation is unsustainable. He does expect there to be de-escalation, but he said he would not be surprised if tariffs come down in a mutual way. He also made the point that de-escalation, Sarah, has to come first here, that there can be no broader trade talks with China unless and until we see some lowering of those tariffs. I followed up in a question about this saying, does that mean we have to see the levels fall from 145 and 125% where they are now, respectively, before we can see any sort of broader, more comprehensive trade talks? And he said, yes, he believes that has to be the way. He also said there is no engagement at this point happening between the two countries, as we believed President Xi and President Trump still not in touch with each other. And he does say that this has to be a leaders' conversation. We have to see the two of them connect. I also asked him about comments yesterday about a 2 to 3 year timeline when it comes to China. He did not say that was for a full trade deal. He said he thinks a deal would come faster. 2 to 3 years would be a full rebalancing between the two countries. As for a deal timeline with other countries, he said
Okay.
very close to announcing something with India, that they're proceeding with other trading partners, but nothing more specific than that. But he did say, confirming some reports as well here, that a satisfactory arrangement does not have to mean the actual trade document. Could be something like a framework or a memorandum of understanding, and then they move forward from there to work to implement that. My understanding, based on his comments, was that tariffs, though, could stay paused at least in the meantime. And then finally, he was also asked a couple of times about Fed Chair Powell as well. He didn't want to directly comment here. He wasn't commenting, for example, on his own role in these negotiations or these discussions about whether to fire the Fed chair. He did say he tried to brush off the whole thing. He said he believes that this was mostly a dragon the press created so that they could slay it. He said termination, as President Trump seemed to call for last week, could always simply mean the end of a term rather than his firing. He said the president for years has expressed his displeasure with the Federal Reserve Chair going back to the first term, so he was not at all concerned with these recent comments. Guys?
Yeah, that goes back to when we were trying.
Oh, thank God, bro. Can you play that part back? The one with the 2 to 3 years? That part's the crucial thing. A trade deal can get done sooner. It's just the full rebalancing is going to take 2 to 3 years.
Yeah.
Hopefully the market sees that and rides higher again. Can you play that again? Just that one piece real quick.
Yeah, I think that was the last.
I want to make sure I didn't
Also asked him about comments yesterday about a 2 to 3 year timeline when it comes to China. He did not say that was for a full trade deal. He said he thinks a deal would come faster. 2 to 3 years would be a full rebalancing between the two.
Okay.
For a deal time.
Cool.
Okay, so that's still good, right? That's not.
Yeah.
It's not bad. We're still kind of dumping on it, but like, I mean, maybe that's enough clarity. There's a little bit of a green candle back up. We were below 537 at one point, 536.
Yeah, that means that that they could probably get it. Like, thank God, man. 2 to 3 years before we get a trade deal, that would be bad. I mean, that kind of uncertainty. Like, we have to figure out what the trade deal is going to be 2 to 3 years. I mean, that would be really bad. All right, so the market's going back up again, right?
I mean, kind of, a little bit.
Yeah, all good. There you go. That's whoo. Thank you, CNBC, for reporting that.
Yeah, I mean, the headlines immediately can change the way people think about it. But yeah, it doesn't seem like it's going to be 3 years for a deal, but a full rebalance probably is going to take even more than 3 years for it to play out. Do you think there's
do you think there's going to be any issues with getting a deal soon, even if the thing takes 3 years to rebalance? Or do you think now that the tariffs have been walked back so much, Xi Jinping is going to want to talk?
Well, Xi Jinping's in a very precarious position right now because their economy is not doing the greatest right now. And the thing is, consumers are still reeling from their property bubble crash. And so they haven't necessarily come out to spend a lot of money just yet. And the thing is, the Chinese are doing everything in their power to stimulate consumption. So I think the US kind of saying, look, we want you to become consumers. We want you to go, becoming a service industry, being more service focused. That would be good, but it's just not at the timeline that they think the US necessarily wants. I mean, I don't know. This is where that conversation with Bessent going to the Japan model was actually somewhat important, because it's almost like the US wants to help China become more consumer focused, like become a more, have more of their GDP based on consumption rather than just manufacturing. And the Chinese want that too. The question is, how do you negotiate a deal that gets you those things? So one of the two things that the US can offer that can help raise standards of living and everything else around the world, and that includes China, is abundance of energy, which is what they mentioned, right? That was one of the key things that he kept mentioning. The other thing is, of course, agriculture. Like US agriculture can basically go out there and be very very supportive to prices. So I think those two things are probably going to be the biggest winners in terms of trade, in terms of volume. So that's why I'm a little bit long on some of the companies that we've spoken about in the past.
Well, today's got to be a good day for your portfolio, right?
Yeah, it's been a good day so far, and hopefully, my hope is that inflation keeps coming down, and we see TLT actually do better. And I think some of the commentary by Bessent actually helps my thinking on that, because the markets want to know that they're basically lending to the US, and the US is doing what it's supposed to do in trying to manage its fiscal house. If you don't manage your fiscal house, what you're going to end up doing is causing people to demand higher and higher rates to basically participate in your bond market, right? So it's almost like if you're going to lend money to somebody, you want to make sure that they have a good credit rating and that they're being smart with how they spend that money. The US in the last 4.5, 5 years has racked on so much debt. And believe it or not, other countries, they'll buy our debt right now, but if they sense that our debt is not going to, it's not going to be paid back, they might not buy it in the future. So one of the things that we're doing right now is trying to get our fiscal house in order, and that should theoretically help our yields come down in the long run.
By the way, the EU just fined Apple and Meta a combined $800 million. That headline came out a couple hours ago. I'm seeing it right now. So Apple and Meta getting another headline. Kris, I'll let you leave in a second, but let's real quick just react to new home sales, and then you can get out of here.
Just some housing data that just crossed the tape. Rick Santelli has that for us. Rick.
Yes, David, these are our March read on new home sales, expecting a number a bit below 700,000 seasonally adjusted annualized units. It's stronger, 724,000, and a slight revision to last month, which puts this up over 7% for the month of March. And here's something notable. This is only the second reading that tops 700,000 seasonally adjusted annualized units in almost 2 years, because this comps all the way to May of 23,
Okay, so that's interesting that we're beating there. So I guess final two questions for you, Kris. What was your take on new homes beating? And then final question from Farzad. Who do you think is in a weaker position, China or the US?
So I'll answer the house question first. I think that just shows that the consumer is still pretty strong, that they're wanting to buy homes and they're actually getting the financing to do it. So credit markets haven't necessarily, loans being where they are, haven't significantly scaled consumer demand back nearly as much as like, so right now, if let's say we got a horrible number, like only 300,000 new home sales, that means that the consumer is probably weakening, or that credit availability has been shrinking, right? Now, the thing is, this is prior, a lot of these closings are probably going to be 30 to 60 days back. So if you made a deal, you know, like 60 days ago, you're finally going to close now, or 30 days ago, you're going to close now. So I wonder what these numbers are going to do going forward, like maybe another 30, 60, and 90 days going forward. If we see a pullback there, then we can see that the consumer might be a little bit uncertain about the economy, and that could be bleeding into the numbers. The US has a problem and the Chinese have a problem. Both of them are, and the thing is, if they work together, they can solve both of their problems. The Chinese problem is a confidence problem among their consumers. They also have a hidden problem that no one wants to acknowledge, but is a very big problem, and that's their population. You know, some people think that the biggest challenge with China is that they have a large population. In my opinion, that's not it. It's actually the age of their population. If you look at the projections for 2050, like, and that, by the way, 2050, it's 25 from now. I'll still be around. You'll still be around. More people will be the age of 65 and over than they're young people that are in like the 15 to, I think, like the 45 range. So you're going to have more people basically taking care of old people than you will actually doing manufacturing and things like that. So that's a major problem for China, you know. So if you look at like the curves, they have a lot of old people, and a lot of those people are you know, basically going to be drawing on the state. And the same people that are, you know, young right now, they're not going to be able to make up for that difference. So that's a really big problem that they're going to be running into. The U.S. has a debt problem. You know, we've built up. We've basically been borrowing. And the thing is, now the debt on the cost to service that debt is taking a larger and larger percentage of our GDP. Yeah. Now we can be like a banana republic and just say, it's okay. Let's just print more money. Screw it. Right. Let's just print more dollars and just pay back the debt. And you can't do that. Like, if you do that, you get runaway inflation. Right. And then eventually the dollar becomes fucking meaningless. Yeah. Now that's the challenge. So the question is, how do you get to the point where you restore Chinese consumer confidence and at the same time deal with the US's runaway debt problem? You know,
I have the solution. I thought of it.
We consume too much. They consume too little.
I have the solution, bro.
What is it?
Tariffs.
Oh, please.
I mean, that's what's been pitched to us, right? That's the solution. Tariffs. Like, no, in all seriousness, that it is a tough problem. So how would you think this plays out then in the next 25 years?
I mean, the Chinese.
Are you sick today?
I've been sick. I'm coming off of a little bit of I had a fever on like Sunday. I don't know what it was, but basically I'm coming at the back end of it. Yeah. I think this is going to be one of those things that I don't know how things evolve, man. I really don't, you know. And the challenge, in my opinion, the biggest challenge right now is that the US is a very dynamic country. It's really good, and it's got a lot of core strengths in it. But even we are going to have very similar problems with our population aging, but at least we have, like, you know, immigration that comes in, and, you know, we're able to somewhat grow through immigration. Now, a lot of times what happens is the rapid level of immigration can cause a problem, right? So we saw throughout the Biden years, they let in too many people all at the same time. And now you've got all this additional manpower. Now, how do you house everyone? How do you provide for education for everyone? How do you provide health services for everyone without straining the system in the country? So I think what it is the U.S. grows, and it's actually beneficial for us to have immigration, but you want to have it in a controlled manner, right, where the people that are coming in, you know, you're able to kind of support them, get them assimilated, get them to that next level of thinking that, hey, leave your old world bullshit problems in the old world. Like, don't throw gay people off roofs, you know, or Indians like don't like fight each other on the streets, or like all the stuff that makes you like American, like get to the point where you're assimilating, and you assimilate to this culture. And I think if you do it in a way where you're doing it in a measured approach, you give that necessary time for people to actually adjust, as opposed to just becoming enclaves that reinforce their stupid beliefs, and then they end up basically just creating like mini societies within the country. And the thing is, they don't ever have to change their stupid way of thinking,
which is basically what happens in China, and that's why they have a massive censorship campaign to get people to think in the right way. But we've seen over the past decade there have been some uprisings in China, especially after COVID, of people wanting more freedoms, and obviously Xi Jinping has shut that down. That's another point. How do you keep controlling billions of people? Like, in the next 25 years, will the Communist Party be able to keep everyone thinking the same way? Because if you don't, you get uprisings.
I think,
and for America, in a democracy, how do we not get into a civil war? Right? The problem with democracy is you're allowed to think whatever you want, but that leads to people hating each other and not being in unison. And so there's different problems there.
I mean, the key to the US's strengths, and it's also sometimes our weakness, is that we do debate a lot, and that does slow things down, but it also protects us as well. So imagine right now this Trump tariff nonsense was happening, and we had Xi Jinping versus Trump, right? Xi Jinping would have said 145% tariffs, and no one could have challenged that. It would have just been, hey, you know what? We got to do what the big guy says, and that's it. With Trump, we could fight back and be like, listen, in 4 years, we're gonna take you and your entire party out. The CCP is not like that. So a lot of the problems that the Chinese have had are due to problems that were created by bad leadership. But instead of that leadership being held accountable, they've just kind of like went with it. Like here's one of the things, like the one child policy that they had. One of the reasons why they're going to have a major problem in the future is because they used that one child policy for such a long time and no one really questioned it.
Yeah.
No one said, hey, I should be allowed to have as many kids as I want. No, you can't have more than one kid. Okay, so that was state doctrine. And now you've got this economic policy that's built on, labor, but then you're going to have this huge fall off in labor in the next 10, 15, 20 years. So even though you graduated and became a very powerful country, you've got this ticking time bomb that you created because you didn't allow for personal freedoms and people to choose in which direction to go.
I feel like the answer to all these questions is AI, which means NVIDIA, baby. That's it.
I think everyone should just, if I had to say anything about policy, I'd say just moderate everything. Be on the moderate side. Use common sense. People tend to just go to the wings of things, wings in ideas, and it's never the case. I think if everyone just became a little bit more common sense oriented, became a little bit more moderate, everything would be great. We'd be in utopia, but it doesn't seem like we'll ever get to that level. And everyone's always like, it's either or. It's either capitalism or communism. Or socialism. There's nothing in between, Yeah,
like I don't even think it's political to say, hey, in a negotiation, when one side blinks, that party is blinking. Trump blinked yesterday. And you've got a lot of people saying, oh, well, you just hate Trump. It's like, what? Like this is the part where I can't fathom how people are like, you hate Trump because you said he blinked first. It's like, I don't know, but have you ever been in a negotiation in your life when one side brings up an offer, the other side brings up an offer, and then the other side takes down their original offer without getting anything from the other side? That's blinking. That's folding.
Yeah.
But somehow you're against the entire administration. It's like, there's no level of rationality or objectivity here. It's just, oh, you hate Trump. And I'm like, okay.
I think this is one of the beauties of democracy, and also one of the fallouts is that everyone gets an opinion, even if it's a stupid opinion, right? And it's your job to basically be I don't know, like intelligent enough to just be like, all right, you don't agree with me, fine. Like, trust me, there's people in the chat. Whenever I look at, sometimes I'll read the chat and I'll just be like, they're like, I hate Kris because he's got TDS, and I'm like, yeah, if you kind of like see some of the things that I've had,
voted for Trump.
Yeah, like I've been fighting real TDS like within my wife's side of the family for like years, to the point where I'm literally the Trump guy. You know, like I'll be at like a cabin trip, and all my friends and their husbands and stuff are all liberals. And I've been there. I'm like, yeah, we need to control the border. And that is funny because now the people that support Trump, because the one time I said, hey, I don't think the tariff idea is a good idea. Oh, this guy's got TDS. Fuck him. Objectivity goes out the door. And then I don't know why people become so.
No, yeah, I'm saying the left does it as well. Like Trump does one bad thing, they ignore all the good stuff that he's done, which he's doing some really good things as well, even if the tariff stuff has been chaotic. And then a lot of the MAGA faithful hate you if you disagree with one thing that he does. And it's like, there's no rationality there.
Dude, and that's the same thing. That's the same thing with Elon right now. Like Elon, like Dan Ives is getting hammered right now for his opinion. And it's like, come on, guys. Like you can't become so like I hate this. What is it called? This like my dear leader effect, where people like I've always wondered how people end up in cults. Bro, I see it now. Once you got this one person and you end up becoming like an idolater and you start worshiping that person, bro, anything that person does, you will support. And anything that I don't know, man. So many people are just like, hey, let me conform to whatever my dear leader says. Like, come on, man, stop that. Like right now, like I said, I don't think Trump had a plan on how he was gonna implement all these tariffs. I just don't think he did.
But you're allowed to say that, but also say, hey, I like what he's doing at the border. And you're allowed to have a nuanced opinion. But I think people need a purpose in life. And sometimes their tribe is their purpose and their ideology is the purpose. And then if you go against their ideology, boom, you've ruined their identity, which is like, a bad way of thinking.
Like I don't like men competing in women's sports. You know, I agree with the Trump administration's executive orders on that, but I don't like how he's going about sometimes by threatening, you know, states to take away their funding and stuff like that, which, you know, like there's got to be ways that you can exert pressure without basically screwing over an entire state. So I think sometimes you can agree with the ideas. You don't necessarily need to agree with the method, like the execution, and that's fine. That's just how the world is, you know.
All right, so last question for you. I didn't even know we did a 3-hour stream. Thank you, everybody, for being here today. Kris, are you finally buying Palantir?
No, not until it gets below
one
30.
share. It's $100, just one share. It's triple digits.
Below 30, bro. Not touching it. Come on, not doing it. Not doing it. I
believe we got back here, bro. $100, baby. Like
some company. I need the one thing I need to just remind myself. No matter how much DD you do, no matter how much you look at the financials, there are going to be some companies that people are just going to rally behind because their expectations are wild, right? So if you're trying to analyze a company on fundamentals, it better be some like old mature company that has to rely on fundamentals and not just future expectations. And I think the PR by Palantir is just amazing. Like they've done a really, really good job of giving optimism to its shareholder base and then also to new investors. Because if you look at the metrics, this is not where it's supposed to be trading. Like anyone right now can tell you it's not supposed to be. Even Tesla is not supposed to be where it is today based on raw numbers. But there's the idea that, hey, I think Tesla is going to be big in AI and robotics, so I don't mind paying this exorbitant price. And I think eventually it'll get to where it needs to go. For me, I'm trying to look at things a little bit more like numerically, because in the past I've been burned by investing in companies that are more hope-based rather than actual fundamentals based. And that's just where I am at with it.
Yeah, there you go. By the way, General Cody, thanks for the $5 super chat. We talked about the Palantir Google deal about like an hour ago when the news first broke. So bullish, not the biggest deal in the world, but it makes sense for the hyperscalers to be using Palantir in the government now.
Yeah.
All right, cool. So yeah, we're gonna end up the stream. Markets are losing a lot of their momentum. I mean, we're still green for the day, but the S&P was up 3.5. Now it's up 1.8. I think if we end the day at these levels, we would still be happy.
I think the market's trying to digest the news and trying to digest like what's going to happen. I'm pretty sure everyone is reaching their investment advisors and like reaching their teams and trying to say, what exactly was this? You know, like the reaction to this could have been very bad, or it could have been really good. And the fact that it's just moderating the good is actually a good sign. I would rather things go like this than go like, you know? So I think overall, if the Trump pivot is starting to kind of like form, that's a good indication that we're at a process of bottoming, and that, you know, as news comes out with different trade deals and different like policy shifts, not 180s, the market could, you know, slowly get back to a confident level again. And like I said, valuations were also extended prior to all of this happening. So this coming down is actually presenting some good opportunities. And then if you think about it, we also have the tax extensions coming up, right? That's going to basically boost things. And then at the same time, you've got probably the Fed cutting significantly in the next couple of years, as long as inflation comes down. I mean, we're still at restrictive levels, but if the inflation picture doesn't develop like to the degree that, you know, people are expecting because of these tariffs, the Fed has every reason to start a cutting cycle. And that's big for margin for bottom lines, because if your cost of capital goes from, let's say, 9-10%, goes down to 5 to 7%, that's 300 basis points of additional margin that you'll get. So, and if you multiply that over the compounding effect of how leverage works, it could be big for earnings for a lot of companies, you know.
By the way, Ken Griffin just said the trade war has evolved into a nonsensical place. You can tell these big money managers, bro, they're getting fed up with this shit. They're getting so annoyed, but they just have to deal with it.
This is one of the great things that, once again, capitalism is a great way of doing things for this specific reason, where people in the capitalist system, especially capital allocators, will fight to make sure that whatever is happening happens where capital flows are going to be the most beneficial, not only for them, but, you know, for the general economy, technically speaking, especially if you're in the stock market. So like right now, if these policies are bad and the markets start tanking, you get an immediate reaction to roll them back, right? If you have a policy that comes out and it's really good for capital markets, what happens to markets? They go up. So it's kind of like it's kind of like a check against bad ideas, you know?
Well, okay, this is the actual last question for you. I'm about to present to you some breaking news. You just said bad ideas, and we can check against it. Tell me if you think this is a good idea or a bad idea. You ready for this?
Yeah, go for it.
There's no way you could have thought we would get this headline today. Trump is going to be hosting a Trump dinner.
God damn it, man. This is the one thing
Hold on. Let me confirm. Don't get angry yet. Let me confirm if this is true. It's for if you hold the Trump meme coin. Okay, a lot of websites are saying this is true. I'm going to go to the website to confirm. But you can connect your wallet, and if you own the Trump coin, it's a dinner. Trump hasn't confirmed it yet, though, so this could be fake. But I'm seeing a lot.
Why spend your political capital on fucking meme coins, bro? This is
so weird, bro. This looks like a legit website, and a lot of news sources are reporting it. Okay, so again, we don't know if this is true, but if it's true that he's going to have some dinner with his meme coin holders, that would be pretty stupid, in my opinion. I would hope that's not the case, though. But see, it's not even that if this is real or not. The fact that this is there because he has a meme coin is, I think, what pisses off so many people. But then they love the deregulation. They love the tax cuts. They love this. So there's
there's Melania coin. There's Melania coin. You know,
where's Farcoin? I mean, Farcoin's up 8% today. So
this is what
it's annoying. But like, you know, you voted for him over Harris for a reason. So
why sacrifice your credibility for something like this? You know, why? Like, it makes no sense to me. Bro, you're like 80 something. You're a billionaire. Like, do you really need that last bit of like squeeze out that juice and ruin your reputation? Like, why? You know?
Yeah, this is really, I hope this news story is fake, dude. There's a lot of accounts reporting it right now. I'm hoping the White House just comes out and they say this is not happening, because this would be pretty stupid. All right. Anyway, Kris, thank you for being here. Appreciate you. We will talk to you later. And we got Google tomorrow. It's a big position for you. So,
yeah, hopefully they give, they give really good earnings, and they also give really good guidance. The one thing I've seen a lot in Google is a lot of emphasis on diversifying away from just search, and they're actually succeeding pretty rapidly in their cloud division. So I'm going to keep my eye on their cloud division and see how much market penetration they're getting from that. And also, Google is becoming a very big player in AI agents. So I'd keep my eye on Google. I mean, I think a lot of people just keep thinking like, oh, Google search is going away. I'm like, yeah, that's one part of their business, which isn't slowing down from what we're seeing. But at the same time, they've got other businesses that are still growing at a really fast pace. And those things are monsters on their own. So I think, Google's a great place to be long-term. So
you're pretty heavy in Google, right? Like tomorrow's a big one.
Yeah.
All right, I've got some Google as well. We will see what happens tomorrow.
All right, later, brother.
Thank you, Chris. Appreciate it. Later.
Take care.
Guys, I'm trying to get confirmation on this thing. Whether it's real or not, it doesn't matter because it just pumped the crap out of the Trump. Pumped the crap. I guess you could say it's pumping the crack out of it as well. But yeah, this thing's up 14% based on this headline. A lot of the big crypto accounts are running with this news. They've always been a fan that Trump has embraced crypto so much that he has a meme coin. So they've liked it. It's from a real website and you can legit register. I just don't know if it's affiliated with Trump. Apparently it's the 250 biggest holders of his meme coin. And you can verify that via blockchains. But the Truth Media website hasn't said anything about it. I think if this is fake, the White House will deny this pretty soon because this news is going very viral right now. I think at the press briefing, they'll probably deny it if it's true. But regardless if it's true or not, it is absolutely humping. Dude, what am I saying today? It's absolutely pumping this coin to go up 15%. This isn't DJT. This is Barron. Yeah, this might be Barron. Barron's probably been enjoying trading these headlines. I mean, dude, if you're in crypto and you have a blockchain and it doesn't need to be associated with your identity, and you know what Trump's going to say before he says because he's your freaking dad. I mean, I think if we looked at Barron's crypto trading history, I think we would see some pretty damn good moves. S&P 500 right here, 1.8%. Tesla 6.5%. Markets are down from where they were at the top of the day, but I don't think we can complain. I mean, pounds are still at $101, right? It's not bad. It was at 103. Now it's at 101. So that is not a bad thing. Go to sleep. I only got like 4 hours of sleep last night. I actually slept. I don't even know why I slept so late last night, but I slept late last night. I probably do need to get some sleep. But you know what I'm going to do, dude? I'm actually thinking of going to get this new computer because I am like tired of having a couple tabs open and then the freaking stream starts lagging. It's getting ridiculous. Maybe I might not be able to get the new computer today, but by next week, I'm getting the new computer. And I know you guys are saying PCs, but I've been using a Mac for like 2.5 years now, dude. Like at this point, I'm a Mac guy. Like it's hard for me to go back to PC. I used the PC for like 10 years and then I switched and then I just could never go back. So I'd rather just pay extra, but I need the stream to not lag because we have a couple tabs open. Is there any Trump tweet? Let me check before we sign off. Also tomorrow. Oh yeah, we got a Trump tweet. Oh boy. Oh, this is a long tweet. Oh my God. Oh my gosh. All right. Let me read this. I don't think it has to really do with markets. It kind of does, but okay. I'll read this and then I'll say what I was going to say. All right. Ukrainian President Volodymyr Zelensky is boasting on the front page of the Wall Street Journal that Ukraine will not legally recognize the occupation of Crimea. There's nothing to talk about here. This statement is very harmful to the peace negotiations with Russia in that Crimea was lost years ago under the leadership of President Obama and is not even a point of discussion. Nobody is asking Zelensky to recognize Crimea as a Russian territory, but if he wants Crimea, why didn't they fight for it 11 years ago? Oh boy. When it was handed over to Russia without a shot being fired. Oh boy. The area also houses for many years
the Obama handover, major Russian submarine bases. It's inflammatory statements like Zelensky's that makes it so difficult to settle this war. He has nothing to boast about. The situation for Ukraine is dire. He can leave peacefully, or he can fight for another 3 years before losing his whole country. I have nothing to do with Russia, but have much to do with wanting to save, on average, 5,000 Russian and Ukrainian soldiers a week who are dying for no reason whatsoever. The statement made by Zelensky today will do nothing but prolong the killing field, and nobody wants that. We are very close to a deal, but the man with no cards to play should now finally get it done. I look forward to being able to help Ukraine and Russia get out of this complete and total mess that would have never started if I was president. Okay, so there was a Wall Street Journal article on Friday last week when the market was closed that said we are getting very close to a Russia-Ukraine deal. However, one of the stipulations of that deal was that the United States is saying that Russia basically officially has occupied Crimea. Zelensky comes out today, apparently tells the Wall Street Journal, there's no way we're going to negotiate because I'm not going to acknowledge that Crimea has been occupied. So again, it comes down to how do you get the deal done? Either Zelensky's in a blink here, either Trump's going to say, all right, he's going to go back to Putin and say this, we can't officially acknowledge Crimea as Russian territory. Like, something's going to have to play out, but it's either going to be Zelensky that says, all right, as long as we get peace, we'll deal with this, which it doesn't seem like he wants to, or it's going to be Putin that tries to take those statements back and initiate some other part of the deal. But it's going to be obviously very complicated. That's not going to be an easy way to get resolved. And one of the things this has implications on the market is because the sooner this deal gets done, the sooner we can get the rare earth minerals deal done with Ukraine, which obviously would be super beneficial for U.S. equities. But the question is when that will ultimately play out. 536 on the S&P 500. It's down just slightly from where it was about 20 minutes ago. It looks like if we end the day up about 1.5%, that would be a win. But we are down from that 3.2% at the high of the day. Shout out to Farzad. Thanks for being here, brother. Thanks to make you the man. Appreciate you, Farzad. And thank you for being part of the show. Okay, so what I was going to say for tomorrow. So Canada is happening on Saturday. The Toronto meetup. I'm going to send this link like one last time, and then I'm flying out tomorrow. So if you want to get details and you want to show up, if you are local on a Saturday, this is kind of your last time to sign up, and I will send the details to your email. Because it's an international flight and the flight's at 7:30, I'm going to have to end the market close early tomorrow. So I think we're going to start early. We're going to start at 3 o'clock, and we're going to go till basically 4:20, and then I got to get out of here because I got to be at the airport a bit earlier. So we're not going to listen to the Google call tomorrow. We will have the Google earnings, and we'll see what Google reports. But the actual call itself, we're probably not going to be able to stream because it would go to like 5:30, and I would probably get late to the airport at that point. So we'll start the market close early tomorrow around 3 p.m. We'll do an hour of just market commentary, and then we'll get Google earnings, which is going to be a big one tomorrow. And then that's it for big tech, at least for this week. Today, oh wow, today's going to be big. Today we have ServiceNow, software, IBM, software, Chipotle, food, Lam Research, semis, Texas Instruments, semis, and then Discover Financial, which is a bank, so financials. So we do have a ton of earnings after the bell that we have to look at still today. All right, cool. There you go. You should use a streaming PC for the stream and your computer for the content. I have a separate computer in front of me right here. Like I'm looking at a separate a desktop right here. The problem is this thing is a bit too big. And so when I tried to use this originally to stream, but then it messes up with the camera right here. Again, this is not like a professional studio or anything. When I move out, hopefully we can figure that out. But the laptop being, because this is 24 inches, the laptop's at 16. So it's just the right way to deal with the camera angle. And that's why I end up just opening up all the tabs on my laptop, even though I have a bunch of tabs open right here. But the other problem is to share the tabs. I can't share it from this computer. I have to share it from the computer I'm streaming on. I mean, I could, but it's just too much work to stream it from another computer. And so that's why getting just a higher quality computer. By the way, Trump meme coin, whether that news is fake or not, we are pumping 27%. Goodness gracious.
I kind of feel like that news might be real now if it's pumping on this. Yeah, getting a better computer where I could just stream everything from would make it easier and help me out. So yeah, I think we're gonna do that. That's annoying, bro. Like that's really it's annoying to you guys. Like just for me clicking on another tab and for the stream to start lagging because it can't handle the load on the RAM or on the GPUs is ridiculous. Like it shouldn't be giving out that easy. So I think we're just gonna get a new computer. And we'll go from there. All right, cool. I think that's it, guys. We'll be back at 3:45. Exciting market open today. Long one. Unfortunately, we're not holding on to the massive amount of gains we saw, but I don't think anyone can be upset with a 1.5% on the day if we're able to hold on to that. And Palantir, I mean, we got a lot of hours left in the day, but dude, if we can close above 100 again, triple digits, that would be very exciting. Give me Robinhood at 45. I'll take that. Palantir at 100. It's been a long time since we got there, so that would not be bad to see. Yeah, most likely a MacBook Pro. I'm just gonna get the most expensive version and upgrade the RAM. I mean, and also I need a laptop way more than I need a desktop for everyone saying a desktop because I travel so much. It's like when I'm streaming in a different state, like you can't bring your desktop. You need a really good laptop, and so I think that might be the better choice. All right, cool. Thank you, everybody. Appreciate it. It's not my birthday for those saying happy birthday. If you're new to the chat, people spam happy birthday for no reason. It's not really my birthday. But yeah, we'll be back at 3:45. And that's it. We will keep going from there. Do you plan to skywalk on the CN Tower? You can skywalk on that thing. They allow you to skywalk on the CN Tower? Dude, yeah, why not? I would want to do that. The edge walk, is it worth it or is it boring? Because I've done the World Trade Center, Empire State Building. It doesn't look that cool, to be honest. It's like CN Tower might be cooler. All right, maybe we do that. If we do it, I'll definitely take some pictures. Yeah, dude, this thing looks pretty cool. All right, maybe. Oh, by the way, for the Toronto, I forgot to mention this as well. So, one of you guys in the chat, I got on with the phone yesterday. And you guys hooked up the entire venue. So shout out to Craig. Craig, if he's watching, it's so funny. I called him and he was like, oh, Amit, give me a second. I have to just sell my Intel. It was hilarious. Like I called him. He's like, wait, let me put in this limit order for Intel. And he's like, all right, so what's up? It's like, you guys are just junkies, but you're trading all day. It's hilarious. But shout out to Craig. He got us a private space, so we don't have to deal with the bars or the restaurants. It's a really dope location. He knows the owner of the building that we're going to, and it's a really chill vibe, really chill spot. So this is going to be one of the first meetups where we actually have full privacy and autonomy over the space, and we kind of don't have to worry about like other people walking in and out. So I think it'll be fun. It'll be a good one, and if anyone wants to come through, again, you can sign up on the form, and it should be an exciting one. Oh, word of the day. How could we forget, dude? Word of the day. Yeah, Intel is laying off 20% of their staff. That news came out yesterday. I mean, it's sad to see that because Intel gets so much money from the government, but nonetheless, I guess they got to do what they got to do to operate as a business. All right, word of the day. Word of the day. Scrupulous.
Scrupulous.
Having moral or ethical standards. His scrupulous commitment to fair wages earned his company a loyal workforce. Even under pressure, the judge remains scrupulous in upholding the law. Why did I think scrupulous meant like something else? Do you guys think that? I thought scrupulous meant like a I don't know, like attractive or something. Oh, I'm thinking of scrumptious. I'm thinking of okay, that's a totally different. Yeah, scrupulous. That is totally different from scrumptious. Okay. All right, so having moral or ethical standards, I guess we'll see how this trade war turns out. Moral and ethical standards probably will have to play a big role. Bessent even talked about the morality of China today. And ultimately, we'll see if this trade war ends up leading in the right direction. We got the China pause. That's what we needed. And now we need some other deals. All right. Thank you, everybody. Appreciate it. I'll be back at 3:45 for the market close. Bye, everyone. Have a good one.